pulling the index slightly down, 150 points up about right now. But let's look at some of the sectors as well and see what's gaining. You have IT that's recovered, it's up about 0.7%. You have PSU banks doing very well today, about 1.3% higher. Auto doing well, about 1% up. Metals about 1.8% up. However, Nifty Healthcare Index is the only one in the lot that's it's actually pretty much flat right now, but it keeps on oscillating between the positive and the negative. But let's talk about some stock specific action as well. You have ABB India that's down about 1.8%. This is on the back of a Nomura note. They have downgraded the counter on rich valuations. Then there's Brigade Enterprises that's doing well in trade today, up about 3%. This is also on the back of numbers that it came out with. You have Vodafone Idea doing very well. It's up about 3.8%. The FPO opens today, and we'll talk about that in just a bit. Then there's Just Dial that's doing it's on tear today. It's up about it's almost 13%. Then there's Mtec that's just zoomed after a particular news flow around it. It's up about 11%. And the news around Mtec is that they have gotten in the UK defense, they have gotten this entry. They have been awarded a place in UK's Ministry of Defence, Digital and IT Professional Services. This framework on an overall basis has a budget of £1.2 billion for 4 years. However, what will be the contribution that Mtec makes to it is we're yet to see that contribution. And Mtec will also come out with its numbers today in the evening. But the focus, we're focusing on this specific company today, which is RK Forgings. The company has won approval to supply powertrain components in the United States. Lalit Khetan, whole-time director and CFO of RK Forging, joins in here with us. Thank you, Mr. Lalit, for joining in and taking the time out and talking to us.
Thank you.
Let's talk about the order that you've just received for supply of powertrain components in the United States. And could you tell us the significance of this order, and if you can also peg a number to it?
So, this order is certainly very significant in terms of EV forays for the RKFL. And you can understand that it's one of the largest US PV manufacturer. I cannot take the name for the confidentiality sake. And certainly right now I can't give you a number also, but it's going to be a landmark order in the RKFL's EV initiative. And you can see upcoming quite a good progress on the EV front due to this win, these approvals basically.
All right. Any sort of guidance that you have, or any sort of, I'm trying to understand the contribution that this order is going to make to your books. Is that something that you can tell us? Any sort of top line contribution?
So I cannot give you a definitive number, but it will be very impactful in the upcoming years. This year, maybe initially, how the orders come, initially you need to get the sample approved and then it's supplied. So this year will be like that. From the next year, you can see a very big volume on this front.
Okay, so volume is something that we're expecting this on. But let's talk about your capacity. We've seen that sort of grow. Now, the capacity numbers, are we going to see that sort of impact coming in FY25 as well in terms of your operational efficiency?
Yes, see, we are in the process of adding capacity, and continuously we have added some capacity last month also. And you can see that we have already a plan to go up to 308,000 tons of forging capability, and including that's cold forging and warm forging. So everything should be in place by March 25. So, and then you can see the utilization also improving and ramp up. So all will have its impact, and that's why there will be a consistent growth on the revenue numbers and the capacity utilization.
Okay, so we're going to see that impact coming in from FY26 effectively.
Will be impact in FY25 also, because a lot of capacity is already installed and in progress. Some will be coming in the June this year, some will be in the September this year. So there will be impact in this year also and next year also, both the years.
Anything specific that you can give us on that front in terms of numbers for FY25, of course?
So already we have given guidance for 15 to 20% growth on the standalone basis, year-on-year CAGR basis. So we stick to that guidance, and we will very much going to achieve that.
All right. Okay, so you also approved a 90 crore investment in February to set up forging manufacturing facility in Mexico. If you can talk to us a little bit about that and how that will impact your top line.
So that order is again backed by a take or pay clause, and this facility is going to start sometime this year. And initially, the first work will be on the basically conversion. We will be doing the machining work, and the machines and component will be supplied by my customer only, and we will only convert, and we are going to make handsome margin out of that. Once we are successful in Mexico in that, then we will put up the press facility also, and that will commence production next year. So that's the plan, and once that is successful, and then we can ramp up further. But yeah, for our benefit, both the orders are, both the initiative are backed by the take or pay order from my customers.
All right. So talk to us also about the synergies that are expected out of a merger of your two subsidiaries, Mtec Auto and JMT Auto Limited into Ramkrishna Forgings. What benefits do you see post this sort of merger happening?
So we are right now merging Mtec Auto and JMT Auto. So both are having a lot of interrelated meaning. Like Mtec is basically a casting unit, and JMT also have a casting facility. So my casting capacity will be merged. So and we are also in process of adding some casting capacity, and we have a lot of machining capacity at JMT Auto. So that will supplement my casting further production needs. So both the units are complementary. So it will be optimization of resources, optimization of I will say economic scale can be achieved at a higher level, and you can see improvement in margin due to the merger of both.
All right. So also let's talk about the industry-wise breakup. Now, obviously, automobile holds a lion's share in your portfolio, but we've seen a little bit of decline there. Now, in FY25, what are we expecting in terms of that? Are we expecting this to grow, or there might be a slighter pull here on the automobiles, but a higher on some other segment?
So see, we are consciously focusing on some other segment to de-risk our sale from the automobile. That's why if you look at right now, we are 70% automobile and 22% comprising of railways, oil and gas, farm equipment, and general engineering. And our initiative is that we should first reach a 30% level on this, on the non-auto side, and ultimately 40%. So we will de-risk ourselves from the cyclical nature of the industry. And with that process, we are working on this, and you can see there is huge opportunity in all these sectors. Even if you look at the railways, India is going through a transition, and huge opportunity there. So we are there to encash those opportunities also, and that will help us to improve our top line also and margins simultaneously both.
All right. Thank you so much for that, and thank you so much for being so comprehensive with us, Mr. Lalit. Thanks for taking the time out, and we'll see you some other time again.
Thank you. Thanks a lot.
Thanks. So that was the management of RK Forgings. But let's talk about another stock that's buzzing today, which is Vodafone Idea. Now, the follow-on public offer, which is also the biggest follow-on public offer, opens today for the public and it closes on 22nd of April. Now, the price band for this specific FPO is 10 to 11 rupees. We saw a very strong anchor book on this one. We saw the likes of GQG come in, Fidelity Investments coming, and among domestic mutual funds, we saw Quant, we saw Motilal Oswal, HDFC. So strong names there, and they were able to pull up about 5,400 crore rupees, which is also the upper end of the anchor raise that can happen. So they were able to meet that sort of demand. So that's a positive, and we're seeing that play out in the stock today as well. While there is a lot of positive around why you should subscribe to this FPO, like there is government support to it. The government holds 33% stake. While that is going to come down down to about 24%. After equity dilution because of this FPO, the government has time and again, including finance secretary, has come out and said how they support this FPO and they do not want the industry to have a duopoly. So the government is definitely supporting this FPO, and but however there are negatives as well. You look at something like a debt of the company. Its gross debt is about 2 lakh crore rupees. They have payments due post FY26. So in the second half of FY26, they'll have payments coming of about 30,000 crore, out of which 28,000 crore will be towards government. Now they say that the proceeds of the FPO will be used towards capex. So essentially expansion of 4G services, setting up of 5G services, and there is and only a little portion will be used, about 2,000 crores or so, that will be used to pay for spectrum dues, past spectrum dues. So the debt that they have, or at least large amount of that debt, they plan to they plan to pay that through their cash flows that they hope to generate after building this sort of capacity in 5G and 4G. But we'll see how this FPO closes, what kind of public demand do they get, and we'll bring you that update. But let's talk about some earnings. Now, a host of nifty companies are reporting their Q4 numbers later today. My colleague Puneet joins in for a quick preview of that.
Yeah, thanks for that, Smriti. So we're starting with Bajaj Auto right now. The company is expected to report exceptional numbers for this quarter. On a revenue basis, the company is expecting to grow at roughly 29% compared to this time last year, while on EBITDA as well as profitability, the company is expecting to report between 28 to 30% growth in its EBITDA and PAT margins. Now going forward, commentary on the company's domestic as well as export division will be key. Do note that the exports are down 10% for the financial year 2024, and going forward, momentum in the export market is going to be a key monitorable. They're also expected to launch the world's first CNG motorcycle in the month of June, priced at roughly 80,000 rupees. And more details on the same in the company's con call will be a key monitorable. Moving on, HDFC Life is the second one that we're tracking. The company's earnings are expected to be a little subdued. On the annualized premium equivalent, the company is expected to report roughly 4,700 crores of APE versus 5,100 previously reported, which will be roughly 9 to 10% of degrowth. While on the VNB premium as well, is expected to have a 14% fall, and the margins as well down roughly 6% compared to previous year, coming in at roughly 27%. One of the key monitorables for the stock will be the 10% year-on-year growth as well as margins on going forward. So apart from the upfront business, the business hasn't done too well in this quarter, and commentary on that will be another key monitorable. And finally, we are looking at Infosys as well. Now, the revenue might drop for the company in this quarter, but profitability is going to rise, albeit on a lower base. So on a consolidated quarter-on-quarter basis, the revenue may drop roughly 0.7%, coming in at roughly 38,588 crores, while on the EBIT margin, expansion is seen, coming in at roughly 20.7% compared to previous year, and net profit may rise roughly 1% on a year-on-year basis. Guidance on FY25 is going to be one of the key monitorables for Infosys, on as well as constant currency revenue growth, how the company has grown, as well as any kind of forward guidance on that. Any kind of wage hikes, salary impact will come in the next one or the second quarter. So any kind of commentary on that will also be key monitorable. Back to you.
So thanks, Puneet, for that. We'll be watching out for those results that come today. But it's time for a short break now. But on the other side, we bring you a special election report focusing on Udhampur and Alwar. Stay tuned.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Welcome back. You're watching Market IQ on NDTV Profit. Let's talk about the upcoming election. Now, India gets ready for the first phase of 18th Lok Sabha elections that start tomorrow. The phase 1 polling will cover 102 constituencies spread across 21 states and union territories. Polls kickstart from the district of Udhampur, called the Gateway of Jammu and Kashmir. Here's a special report from NDTV.
Kathua, gateway of Jammu and Kashmir, is witnessing a fierce election battle. Kathua is part of the Udhampur parliament seat, where the BJP is facing a strong opponent for the first time in 10 years. The Congress's Chaudhry Lal Singh, a former minister and two-time MP, is pitted against BJP senior leader and union minister Dr. Jitendra Singh. Singh blames the Congress for helping Pakistan by not completing the crucial Shahpur Kandi barrage that would have ensured no water from the Ravi River flows to Pakistan.
ताकि तुष्टीकरण और क्षेत्रीय भेदभाव की राजनीति के चलते वो नहीं चाहते थे कि इस इलाके का भला हो। मोदी जी के आगे जब ये बात रखी और उन्होंने इस प्रोजेक्ट को रिवाइव किया, अब ये तकरीबन तैयार हो गया।
The 2019 election was a cakewalk for Dr. Jitendra Singh in the absence of a formidable candidate from the opposition. But this time, the election was being seen as a one-sided affair, till the last-minute entry of heavyweight Lal Singh into the Congress. Lal Singh accuses the BJP of snatching land and job rights of people in J&K that were protected under Article 370.
मकान तोड़े जा रहे हैं, उसके खिलाफ खड़ा हुआ हूं मैं और मेरी पार्टी।
The Udhampur parliament seat is spread over 20,000 square kilometers, with mostly mountainous terrain across 5 districts in Jammu and Kashmir. With 11 lakh voters, a traditionally high voter turnout is literally keeping parties on their toes.
Next few weeks are going to be very intense campaigning across Udhampur parliament seat, where polling will take place in the first phase of elections on 19th of this month. It's a high-stake battle. Earlier, it was seen as a one-sided contest, but as campaigning picks up, it appears that it may well be a very tough competition between Congress's Lal Singh and Union Minister Dr. Jitendra Singh.
Well, the focus is also on Alwar in Rajasthan, and it's a Yadav versus Yadav battle there, where Congress MLA Lalit Yadav is taking on Union Minister Bhupinder Yadav.
for its onions, mustard, forts and tigers, Alwar in Rajasthan will see an intense battle on the 19th of April between Senior Minister Bhupender Yadav and Congress MLA Lalit Yadav. While the former, a key strategist and crisis manager for the BJP, is focusing on national issues and Prime Minister Narendra Modi's credibility, the latter has mounted himself as a local and more deserving of a victory. Bhupender Yadav, who handles important portfolios such as labour and environment at the centre, has a punishing schedule. Nearly 47 sabhas visiting each village in the constituency, promising water and also a crackdown on the exam mafia.
मेरा अलवर के साथ जुड़ाव 40 साल का है। मेरी सिस्टर, मेरी बुआ, मेरे नाना, वो सब अलवर के हैं। ये सामाजिक रिश्ता आप यहाँ पर देख चुके हैं।
The seat was won by BJP in 2014 and also 2019. In fact, Rajasthan itself was swept by the Modi wave both times, which makes the outcome in Alwar in some ways predictable. Bhupender Yadav says this election is about Narendra Modi and the country, not so much about the opposition.
ओपोनेंट का कोई ऐसा विषय नहीं है। ये चुनाव सीधा राष्ट्रीय मुद्दों पे चुनाव है। ये चुनाव मोदी जी पे चुनाव है और मतलब मेरे को नहीं लगता है कि कोई ऐसा कोई यादव होने के कारण कुछ है।
The Congress candidate Lalit Yadav, meanwhile, is hopeful after the Congress victory in 5 of the 8 seats in Alwar in the recently held assembly polls in Rajasthan. The centre should have done more to address the water crisis in the constituency, he says.
जो भारतीय जनता पार्टी के प्रत्याशी ने गांव-गांव में जाके ये कहा कि हम आपको नहरी पानी पिलाएंगे। मैंने गांव में सबसे कल मैं गया तो मैं वायदा करके आया हूँ कि मैंने कहा केंद्र मंत्री बताते हैं और इनकी सरकार केंद्र में है, वो नहर लाने की बात कह रहे हैं। ये नहर ला देंगे अलवर में तो मैं इस्तीफा दे दूंगा।
Voices on the ground talk about national as well as local issues.
वाजपेयी जी के टाइम से क्वाड्रिलेटरल्स रोड्स जोड़े, उनकी एक स्कीम ये भी थी कि वो सभी नदियों को आपस में जोड़ेंगे, तो वो एक पानी का मुद्दा वहाँ से सोल्व होना शुरू हुआ था मेरे हिसाब से।
देखो जी, यहाँ तो मोदी जी का क्रेज है, मोदी जी के उस पे वोट पड़ेंगे।
बाहरी और लोकल का मुद्दा ज़्यादा है। भूपेंद्र यादव बाहरी हैं, ललित यादव यहाँ लोकल है।
Women here raise grassroots issues and share their experience.
जो खेतों में औरतें शौचालय के लिए जाती थी तो गांव वालों को भी दिक्कत होती थी कि ऐसे ऐसे खेतों में औरतें बैठी हैं शौचालय के लिए। अब साफ सुथरा माहौल है शौचालय बनने से, मोदी जी ने अच्छा काम किया है शौचालय।
These are the structures which show that this place has some connection with the past, but right now it is looking at a secured future, it's looking at a promising present, and water is at the center of it, which is why the war cry before the Lok Sabha elections of April 19th, Alwar votes in the first phase, is Nehar no mamlo hai, Desh no mamlo hai, basically combining national and local issues in one sentence. BJP's Bhupender Yadav, a veteran minister, is fighting against Congress's MLA, Lalit Yadav. This battle is going to be interesting. It's seen as a battle of Yadavs in a constituency that is dominated by Mayo Muslims, OBC voters, Meena voters, SC voters, and also Yadav voters. It remains to be seen as to whose narrative works, with the BJP focusing on national issues and promising to address local issues at the earliest, and the Congress promising to rehaul the entire system and putting the BJP in the dock.
Well, that's all that we have on this edition of Market IQ, but don't go anywhere. We have lots more lined up for you on NDTV Profit.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some
Hello and welcome. This is the Mutual Fund Show on NDTV Profit, and my name is Alex Matthew. This is where we break down concepts and give you actionable insight so that you can make your investment decisions with confidence. On some occasions, we also like to speak to the people managing your money, the fund managers. It gives you an opportunity to understand their thought process and methodology and how they're reading the trends right now. My guest today has managed to beat quite a few of his peers in the two major funds that he manages. One is a mid-cap and the other is a flexi-cap fund. Joining me in studio is Niket Shah, the fund manager at Motilal Oswal AMC. Thank you so much, Niket, for taking the time.
Thanks, Alex, for having me here.
So before we get into each of these funds, and I would like to, of course, break these down and talk about your approach. And I guess there will be similarities. But let's talk about the overarching framework of the fund house and how your own approach to portfolio building fits into that.
So, Alex, as a house, we have always focused on the QGLP philosophy, which is, identifying the right stocks with very high growth without compromising on quality and provided they're available at reasonable valuations. Once you get these three combinations right, we've generally seen that it's a recipe for a multi-bagger, right? Or significant returns over the index. So that has been our overarching philosophy. The second important thing that we have now added over a period of last 3-4 years, because the markets have got much more broader. If you look at from 2010 to 20, market was extremely polarized with few sectors doing very well. Who thought that sectors like railways and defense will do so very well post-COVID? So the markets have become more broader, and hence what we have now started to do is that we are looking at different themes. We want to ensure that most of the themes that we want to play for the next 3 to 5 year period, we are invested ahead of the curve. And that has really helped us in the last 4-5 years to really perform well as compared to some of our peers.
Okay, so and what is the approach that you take as a manager of a fund within this overarching framework?
So I think for us, what is important is that you identify themes ahead of the cycle. And some of these themes might not be near-term themes. We generally look at investing in businesses with a 3 to 5 year view. Obviously, markets have become extremely faster nowadays. Something that you think that is going to come in next 2 to 3 years from a return standpoint comes in 6 months or 1 year, and you have to act by tweaking it down. But for us, primarily, thesis has always been that we will focus on themes with a 3 to 5 year view. Themes where today the market is not appreciating it, and over a period of time, market will realize that there is significant value in some of them. Just to give you some example, if you look at some of the food delivery businesses that we bought much earlier in the cycle, or recently we've added telecom in a material fashion. These are themes that we believe that will play over the period of next 2 to 3 years in a significant fashion. And we want to be ahead of the curve by positioning ourselves and all our funds.
So that's what you're doing currently, but talk to me. So you said that this is something that you changed about 3 years back. Talk to me about things that you've done over that period, because I would think that in order to have a consistent outperformance, you need to get the strike rate more or less right. And not all of those themes will take off when you want them to take off. So talk about both ones that have worked and ones that have not.
So for us, multiple themes have actually worked in the last few years. So post-COVID, we went overweight on IT because it was extremely visible that tech will become the next big thing, given the fact that everyone was working from home. Subsequently, when tech really went through a valuation of 40 times, 45 times 1 year forward earnings, we thought that these are not sustainable. We actually went underweight on tech at a time where tech was a darling of the street. And we looked at capital goods, environmental clearances over a decade were at a lifetime high. We thought this is the time to go overweight on capital goods. If you look at the gross capital formation, was about 36% of GDP in the past, which has come down to 27% and now started to go back to about 30-31%. A lot of the stuff like PLI, Make in India were clearly visible and the benefits were about to come. So we went overweight capital goods, again, much ahead of the cycle, before the cycle really started. The third thing that we also did is, a lot of our themes like EV, right? We looked at companies where in the next 5 to 7 years, if EV penetration in the country has to materially move up, which are the companies which will benefit?
Not just the OEMs?
Not just the OEM, but from an ancillary standpoint as well.
Okay.
So which are the companies which will benefit? Now within EV, whether it's 2-wheeler, 4-wheeler, 3-wheeler, where you really want to put your money on, because where is the profit pool? The profit pool lies in 3-wheeler, and 2-wheeler and 4-wheeler will be a fierce, full-fought battle.
Yeah.
So again, having that granularity breakup of where you really want to go and put your money on. Fourth that we also did is, if you look at over the last 3-4 years, we have moved out of the large cap IT, we moved into mid cap IT, right? We believe AI is going to be a next big thing, and I think it will surprise all of us at the speed of which it is going to come to us. And I think the amount of benefit that the Indian tech companies will get over the period of next 2-3 years will be absolutely staggering. This is, I think, the next big innovation post-internet.
So you're going overweight now on IT again?
So we actually went overweight last year on IT when some of the large cap companies downgraded the guidances and tech went down. That was the time we went materially overweight on IT as such. And last but not the least is telecom, which I mentioned earlier. We believe this year is going to be a year of telecom. I think if you look at global ARPUs versus Indian ARPU, I think we are at far lower levels. The time is right to materially move up those ARPUs.
For all the entities?
For all the entities, hopefully. And over and above that, I think the penetration in the country for telecom is extremely, it's very well penetrated. So I think the next round of ARPU hike increase should happen sometime post-election, and that should lead to a further round of re-rating for most of the players.
Let's talk about both of the schemes individually, and I want to start with the mid-cap scheme. Assets under management of close to 9,000 crore, and we can pull up some of those numbers on the screen. The fund's 1 year performance is about 61.4%, benchmark is 64.95%, which is interesting, but the category average is much lower at 50.9%. it's something of opposite ends, right? Or rather, flipping the story, where you're talking about large cap, which has failed to beat the benchmark for a long period, but then that role reversal took place over the last year, where you said mid cap and small cap fund managers have found it much harder.
Yeah.
Why is that?
So I think one reason is that the market has become extremely broader.
Right.
I mean, fund managers who have managed money for a long period of time have been used to buying certain set of stocks, right? Sectors like defense, sectors like, rail, PSUs, no one thought they would have got to such an extent. So it took everyone by surprise. Now, for us, thankfully, we actually had, while we didn't have allocation to a lot of the PSU names, we had allocation to some of the other names which did very well for us, equivalent to what PSU would have done.
But Niket, I'm looking at your portfolio, and in both the mid cap and the small and the flexi cap, and I'm asking you this because it is relevant for both. The number of stocks that you're holding in the mid cap is 22. If I'm not mistaken, there are 27 in the flexi cap fund. And the top 10 holdings, it's what, 67% for the mid cap fund, 65+% for the flexi cap fund. This is a very small number. Doesn't that make your job harder?
Yeah, so Alex, we don't start at such higher weights. We generally start at 6 to 7%.
Sure.
It's just that those stocks have become 4x, 7x, 8x over a period of time. I think it's a good problem to have if you buy something at 6, 7%. I think the team has a very high conviction on a lot of stocks that we actually allocate. So wherever we have a large theme, the team has high conviction on it, we will go and allocate reasonable amount of capital on it. And over a period of time, when they multiply materially, say 3 times, 4 times, the weights tend to move up. And we do manage risk by cutting down weights if it moves about 12% or 13%.
So you're talking about weights of individual stocks. There are a couple of those in your portfolio right now.
That's correct.
So what you're saying is that, but 10%, isn't it mandated to have 10%?
No, so the regulation says that you can't buy more than 10% active on day one.
Okay.
Right, you can buy 9.99.
Right.
And then if the stock price appreciates,
right,
and then it goes to 12, 13%, that's allowed. But then that's an internal philosophy that we have that about 12, we won't allow it to go. So we will cut it off.
So and on an ongoing basis, you're saying that this is par for the course. If you see a concentration of 65 odd % in the top 10 is nothing to be, nothing unusual from your perspective.
No, I think it is slightly unusual because what has actually happened is the stock bets that we took last year, thankfully all of them did very well. And all of them are either up 3 times or 4 times. And that's the reason why we have that kind of performance. Now, over a period of time, as the size really moves up, we will have to move to more number of stocks.
Yeah.
Having said that, when we buy some of these names, right, where we have 7-8% allocation to start with, I think the fundamental philosophy that we follow is that the downside risk has to be much lower.
Yes.
Right. So the risk-reward ratio has to be much more in your favor. Otherwise, you can end up, having a material bad year if there is a significant drawdown in markets.
So, but wouldn't your downside be protected if you have less of a concentration in a few stocks? So I'm trying to understand what the philosophy is.
So the philosophy is that if you have high conviction ideas, you bet big on them. And if you have done enough amount of work and enough amount of research on them, why not play it, with reasonable amount of weights?
Right.
Now, reasonable can be 5, 4, 3, 6, anyone's guess. For us, if there is extremely high conviction that we have, we believe that this is a company where the market is mispricing it materially, and it should effectively over the next 3 to 5 year period give us disproportionate return on our investment. We will actually start with 5 or 6%. Now, if that stock multiplies, it's a good problem to have.
Okay. So the other aspect that I'd like to talk about is, of course, the sector allocation. And there are similarities in both the funds, obviously, because you're looking at the same set of stocks, right? There is and I'm looking at the mid-cap fund right now, there is the largest allocation towards technology. And there is also a significant allocation in both flexi-cap as well as mid-cap towards consumer cyclicals. Talk about some of these bets.
So I think tech, as I said, we believe that the mid-cap tech will do extremely better than the large-cap ones. I think some of the mid-cap names don't have a headwind of AI, right? Some of the large cap ones do have some headwind of AI. If AI becomes larger, some of their business segments might start to decline as such. Having said that, the base of the large caps are much higher as compared to mid cap companies. So obviously the percentage growth will look much more better for the mid cap names as such. So we want to play that entire AI theme over the next 2 to 3 year period. And within that AI theme, which are the companies which are rightly positioned is something that we want to really bet on. Within tech also, if you look at a couple of names that we have is something on EV side, right? They do large amount of tech work or ER&D work for auto business as such. Now, if you look at the whole EV value chain, right? It starts with tech first.
Right.
You get the tech right, you get the, the entire, ecosystem right, and then the car comes and then it goes to the market, right?
Right.
So we want to play this first cycle first, and then we will play the other cycle. We have bets in the other cycle as well. But we started with tech first because that's the first starting point for any EV manufacturer, any EV OEM to start with.
Okay, so we've got a fair sense of how you manage the building of your portfolio. I'm curious about what you think about valuations as they stand right now, broadly, in these funds that you operate, because you're looking at the broad spectrum and you're looking at mid-cap very closely. So where does it stand right now? Are you comfortable based on the kind of earnings growth that you've seen? IT, of course, we're bang in the middle of the earnings season. We're waiting for Infosys today. Let's see how that pans out. But and anyway, you're talking about mid-cap IT more than large cap. So how do you see the earnings picture right now, and how do you see the valuation?
So I think, Alex, if you look at from 1997 to 2020, earnings growth for mid-cap index was about 12%. If you look at earnings growth from 21 to 24, it's in north of the 40%. So I think one really has to look at valuation in that context.
Okay.
While valuation of mid-cap, if you take a 10-year average, is about 23.5 times. And it's right now at about close to 25 times. So obviously we are higher than a 10-year average. But if you compare that with growth, we are materially higher than 20-year average.
So it's justified.
Right. So it's completely justified. So whenever there is higher growth, you will see valuation moving up. For example, if this growth had to slow down, the valuation will also come off.
Yeah.
Right, to that extent. So I think we have to look in that context. Having said that, while the valuation, the headline number looks higher, there are pockets where the valuation is extremely cheaper.
Okay.
Right, where we believe there is value. So I think there are a lot of pockets within the mid-cap space where there is value, and there is still, we believe there is materially lower valuation as compared to the longer-term averages or global averages. Right, and we would love to have a large part of that as well.
Now, the other aspect, and why I'm curious to speak to fund managers like yourself, is also there is a little bit of noise that was created about a large amount of inflows into the mid-cap and the small-cap space. And there is this new exercise that is being conducted.
Yes.
I would think that to a certain extent you were already, as an industry and as fund houses, doing this and looking at risks emanating from your portfolio. Do you think it serves the purpose to share this information with individual investors as well? And how would you explain the importance of the risk or the stress test that we're currently reading?
So I think, first of all, I think anything that the regulator does, we have to have a much more longer term view towards it.
Sure.
And I think whatever steps regulator has taken in the past on the industry side, most of them, in my opinion, have been beneficiary to the industry as such, right? And beneficiary to the retail investor specifically. If you look at the stress test in particular, larger the size of the fund, the number of days will be more, right? By design, right? Because there's X amount of finite volume a stock will actually do on a daily basis, right? And lower the size of the fund, that dynamics also plays out. So one really needs to keep that in mind. The second thing is, from a stress test point of view, I think what is important is that in case of a Six Sigma event, how much time would it take for the funds to give you back the money back is what I think a number it is. So I think it's not very, very relevant, for the retail investors to really look at it, whether it's a very well liquid fund or whether it's a fund where there is a lot of illiquid stocks around it. I think as a fund house, we also do a lot of focus prior to this exercise that we don't need to buy a lot of illiquid stocks. And hence, if you look at most of our top holdings are the ones which are very, very liquid.
Sure.
Right. So I think it would not, one should not get too much perturbed about the numbers as such. But I think it's a much more qualitative feel that the regulator wants to ensure that in a drawdown kind of an environment, the mutual funds are able to honor it.
So the final aspect, which is the opportunity that you have to speak directly to your investors, in this context, and we've spoken about valuations, and you've pointed out that there are pockets where there is actually attractive valuations,
right,
as opposed to people saying that it's across the board expensive. What message would you give to your investor right now?
So I think my message to investors has always been that think for the longer term. And one thing that we always keep telling all our investors is never give up on India, right? I think that every time when you think that the valuation is expensive, or every time you think that there is going to be a correction because market went up too fast, don't try to time the market, right? We have done that in the past and we have failed miserably ourselves. So the lesson that we have learned from our mistakes has been never try to time the market. always be for the longer term. There is an opportunity in market every day, right? Every day when the market opens, there's an opportunity for you to buy a stock and make material returns over a period of 3 to 5 year period. So I think about the longer term, don't give up on India. And yeah, that's a word.
So, and then the other aspect, and this is the final aspect, of course, is that I would think that, so I'm trying to understand. So you've described your portfolio building strategy. Is it all fundamentals, or there are some aspects of quant indicators that you look at when you're building?
100% fundamentals. I wish I would know anything about technicals and quantitative quant strategies. Unfortunately, I don't know any of them. So we would like 100% fundamentals. Our energy is 100% dedicated to that.
All right. So Niket, thanks so much for joining in. And in fact, I look forward to more interaction like this over the course of the year to figure out how things are panning out. And always a pleasure having you on the show.
Thank you so much for having me, Alex.
All right, viewers, there you have it. So Niket Shah of Motilal Oswal talking about his strategy and his approach to building the portfolio for you, the investor. But we've got more to talk about on the other side of this very short break, so do stay tuned. Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Welcome back. You're watching The Mutual Fund Show, and my next guest is Amit Kokreja, who's the founder of AmitKokreja.com. Thanks so much, Amit, for taking the time. We were just speaking with a fund manager at Motilal Oswal, Niket Shah, and we were talking about his approach to building his portfolio. And incidentally, what stood out to me when I looked at the performance of his mid-cap fund and the category average and the benchmark is that not many fund managers in the space have actually managed to beat the benchmark over the last 1 year. What, according to you, is the reason why that has taken place?
See, Alex, we have to understand that markets are not very easy to comprehend. There are multiple factors that can determine the performance of a mutual fund. There was a PSU rally, there was a representation in the index and the representation of a mid-cap stocks in the fund. Right? There's also a factor that the allocation of the mid-cap fund has been more towards large cap also, more than 20% in certain cases, just to be protective about the investors' money. So there are many reasons which has triggered the underperformance of the mid-cap funds with respect to the index, but that doesn't mean it ends it all here. There are many other opportunities which have come our way. And there is also a horizon that needs to be kept in mind. If we were to conclude that this is time to exit actively managed mid-cap funds, and that is not the case. 1 year is too short a frame to judge it, but there are several factors that we need to look at, and that potentially caused it, that potentially caused the underperformance of the mutual funds in mid-cap category.
All right. Now, there are several queries that have come our way, Amit, and I'm sharing some with you. And I do want to point out to our viewers at this point that Amit does not give recommendations of individual schemes, but I'm still going to ask him to perhaps give us an idea of what schemes broadly he likes in categories. The first question, Amit, is Shankar. He's aged 49 and he's looking for guidance. He says that he's new to mutual funds. He has made 10 to 12 lakh last year through his stock portfolio, and he's now looking to invest those gains into mutual funds for the next 4 to 5 years. What kind of schemes or what kind of categories can he look at?
So 2 things I want to just call out. Shankar should have gone with mutual funds first, then with stocks. Investments is a layered strategy, right? So you should do diversified mutual funds first, then stocks. But anyways, he has already done the investments and he is talking about only investing the gains. I would rather say go full on with investments in mutual funds, pick up flexi cap and multi-cap categories. We just spoke about the mid cap and the small cap underperformance with respect to the index. We need to make sure that the more flexi cap and multi-cap categories we have in our portfolio, the easier it becomes for us to have a decent double-digit return in the mutual funds portfolio. So pick, for example, UTI Nifty 200 Momentum 30 Index Fund. Fantastic performance. You can pick up Parag Parikh Flexi Cap. You can pick up Quant Mid Cap Fund. So these are some of the funds that he can add to his portfolio. Their performances have been very decent.
Okay. Incidentally, the next investor we have, Rajat Mishra, does have a SIP ongoing in Parag Parikh. He's got 50,000 rupees that is going towards that. And he's got another 25,000 that he's putting in the Nippon Small Cap Fund. Additionally, he wants to invest a very large amount of money. He's 56 years old, Amit, and he wants to invest as much as 2.5 crore and retire in the next couple of years. And he wants that corpus of money to give him a regular income. Should he look at an SIP approach or should he look at lump sum, and how should he, which fund should he look at?
The two or three words of caution for Rajat. I hope he has done a detailed financial planning exercise with somebody who has given him a right asset allocation strategy given his age. Second, he's thinking in terms of lump sum or monthly. I think monthly or putting a lump sum in a liquid fund and then doing a systematic transfer plan for over a period of, let's say, 2 years would be a better approach than doing lump sum in equity. And number 3, he needs to make sure he has a decent fixed income allocation before he moves into equity. So obviously asset allocation, a good fixed income portfolio, and then a stretched out systematic investing calendar from liquid to equity through the lump sum investments in liquid would be the right approach.
Okay, but to this end, and there will be a lot of viewers themselves or viewers who have their parents that are very close to that age, 56 or thereabouts, and a lot of them are approaching the mutual fund space for the first time. On an average, in your opinion, in a model portfolio, what kind of equity allocation should be there and how much fixed income should be there? Because I think people get this particular aspect either very wrong or not right enough.
Yes. So on an average, assuming the fixed income cost or the lifestyle, so I would say the lifestyle cost that you have given your age of 54 plus should be coming from a fixed income allocation. The rest can be put in equity, but in terms of asset allocation, at least 20% in equity or more, but you have to ensure that the fixed income, you have to think about the crashed market situation. If the market goes down, let's say market corrects by 20% or 30% at that time, are you comfortable enough to pull out your money with losses? Or do you have a decent fixed income allocation, which is going to cover for your lifestyle expenses and the crash does not bother you? And you have to also look at the liquidity of the investments also. So it's a very subjective situation that needs to be properly analyzed with an expert to see what's giving you regular income, what's giving you capital gains in terms of tax efficiency? What's the one which is contributing the most towards wealth accumulation and wealth preservation? Three aspects need to be put together. And then a conclusion needs to be made, how much equity and in what all equity funds and stocks.
Absolutely. Thanks so much, Amit, for laying that out. And hopefully, Sahil, this has, or rather, in fact, Rajat, this has answered your question. Thanks so much for taking the time, Amit. Always a pleasure speaking with you.
Thank you. Thank you for having me on the show, Alex.
All right, viewers, there you have it. If you've got more questions, by the way, you can send them to us on the number on your screen. In the meanwhile, there's lots more coming up over the course of today. And this is NDTV Profit. Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
Hello and welcome back to NDTV Profit. You're watching Large Trades, a show where we talk about all kinds of bulk and block deals, large trades and stocks that have been buzzing on higher volumes. I'm your host Mihika Barve and with me is Agam Vakil. But before we go to the host of stocks we'll be talking about today, Agam, how are the markets faring like right now?
Well, it's a mixed market, Mika. Actually, the last half an hour or so has taken the markets by surprise by seeing a sharp drop. And since then, we've had a little bit of recovery. And at the moment, of course, the Nifty is trading flat. We haven't seen too much traction, though we are looking at the Nifty trying to make an attempt to make a little bit of recovery. Do remember that at one point in time, the Nifty had gone below the mark of 22,100. And since then, it is trying to recover. It has recovered to just a tad bit, but you remember a lot of positions have been taken out of place, at least given the fact that it's been in options, weekly options expiry today. A lot of these factors will play out, and considering the increased volatility as well, it does seem like, well, at the moment, markets are becoming extremely challenging, especially for those who are in fact trying to write options at the moment. Now, if we consider how things are panning out as far as the Bank Nifty is concerned, let's pull that up as well and take a look at what's really happening there. So a 0.3% decline there as well. In the broader markets, let's take a look at how things are potentially turning out to be when it comes to your mid-cap index. That's up around 0.5%, and the small-cap index as well is up around 0.8%. So there's been a little bit of an outperformance as far as these crucial indices go. But really the question is that where do we go from here? Let's pull up your Nifty key gainers right at the top of the list. Let's see where you are seeing that pull and push. So we have Bharti Airtel, which is providing the bulk of your gains there, along with Infosys and TCS. And what's weighing down on the indices is banks essentially. Axis Bank, HDFC Bank and ICICI Bank, along of course with Nestle. Nestle has been weak since morning, but it's largely the banks which are actually pulling the indices down at the moment, and something that we're going to keep an eye on as well. To take a look at some of the key movers as far as the broader markets go, at least in terms of some of your larger mid caps, and that's something that I want to take into consideration for now. In terms of losers, we have weakness in IGL, which is down 4.5% right now. Max Health is the other one. Max Health is also down around 4%, along with Nykaa, that's down 2.6%. And we have the Nobel or Realty, which is also under a tad bit of pressure. On the other hand, if you consider something like a Mankind Pharma, that's up 5%. Indus Tower remains strong through the course of the day. That's down around, that's up around 4.9%, and Torrent Power is also up around 4.6%. So on the whole, we are looking at mixed cues, and we continue to keep an eye on a lot of these counters. That's notwithstanding all the counters that we have in mind and that we're going to address in our show today. Mihika.
Yes, thank you so much, Agam. Just to highlight, Nestle down 4%, and government sources are telling NDTV Profit that the Union Ministry will be taking the report that was published by the FSSAI very seriously, and they will be looking into it. But moving on to the stocks that we do have in focus today, we have something like a Just Dial, a Ramkrishna Forgings, PTC Industries, as well as Techno, Electric and Engineering, as well as Angel One and Prycol and Mtec. But up first, we have Just Dial. Now it gained just at opening up 9%, and now it's gained further up almost 14%. And we have my colleague Mahima joining us with more details on the same. Mahima.
Right, Mika. So Just Dial is buzzing, or rather I'd say ringing in trade today, where it did touch an intraday high of almost 14%. Volumes around 32 times its 30-day average, which is not usual for a stock like Just Dial. The resistance levels are around 1010, which is its 52-week high, and support levels at around 774, which is a 1-month low. Now, in terms of why the stock is buzzing, well, it came out with its Q4 numbers, where the revenues are up around 2%. So revenue growth has remained flat. However, the EBITDA has seen a significant growth of 17%, profits grew by around 26%, and margins have improved from 22.8% to 26%. Now, in terms of the overall update that the company has given, where in terms of traffic share, mobiles is the maximum, where the traffic is coming from around 85%, and the website gives around 12%, and remaining the voice call centers give around 3% of revenues. Now, in terms of revenues, the revenues have grown from 845 crores to around 1043 crores, and margins have also significantly improved. Now, in terms, we spoke to the management today, and the management has given some kind of guidance. They've said that the margins have improved on the back of cost efficiencies. The B2B business at present contributes around 26 to 27%, but going forward, they expect the B2B business to contribute almost 1/3 of the total revenue, and they were expecting that the top line will grow around 15% by FY25. Lastly, say in terms of the street view, well, the street looks bullish on the stock. 7 say buy, 2 say hold, and 1 say sell. And overall, if you talk about the stock performance as well, 1 month the stock has been up 30%. Now this is majorly on the move that the stock has witnessed today. YTD the stock is up around 25%, and 1 year the stock has been up 52%. Back to you.
All right. Well, good updates coming there as far as Just Dial is concerned, especially based on its quarterly earnings. Mahima, thank you for joining us and taking us through those factors in there. And of course, looking at sharp up move in there. Of course, also at a 52-week high coming through. But let's talk about RK Forging then. And we now have Puneet joining us and telling us about what's happening here. Puneet.
Yeah, thanks for that, Agam. So, RK Forging is running on a business update basically today, where it's secured an approval to supply powertrain components to US's largest electric passenger manufacturer. And the manufacturer has granted approval for powertrain components. Based on this, the stock has hit the stock is up on volumes of roughly 5.5 times its 30-day average, while hitting an intraday high of roughly 5.5%. The quantification of management was on NDTV Profit today, and they haven't quantified the value of this particular order, but they have said that they're positive on this particular space, and going forward also, the company has been very active with its business updates this particular quarter, merging its subsidiaries and expecting synergy benefits out of it as well. On the Q3 earnings, the revenue was up roughly 36% for the company for the Q3 FY24 earnings, while EBITDA as well as margins have shown decent growth of roughly between 29 and 42% compared to the same time last year. It's currently automobiles constitute roughly 77% of the revenue of the company, which is down somewhere from 79.3% compared to last year. Other businesses such as railways have picked up, and they said that they are expecting to diversify also from and lowering the share of automakers by just a bit, which will still quantify to be the largest share. Finally, on capacity addition, the company was roughly at 96% capacity utilization as of Q2. So in the last quarter, they have said that they are in the process to add roughly 32,000 tons capacity addition, as well as planned a cold as well as hot press capacity additions to the tune of 65,000. Taking all of these additions into consideration, the total final capacity is expected to go up from roughly 210,000 tons to almost 310,000 tons. And going forward in Q4, apart from commentary on the quarter itself, capacity utilization is one of the key things to look out for. Back to you.
Thank you so much, Puneet, for those updates. Up next, we have a metal components manufacturer, and that is PTC Industries. It's up in trade on the back of higher volumes, spared some of its gains, but up 7.5% nonetheless. But we have Kanika joining us to give us more details about the company. Kanika?
Thanks, Mika. So PTC Industries is a manufacturer of precision metal components, and it's buzzing in trade today with volumes at 7.9 times its 30-day average, with an intraday high of almost 13.4%. Now coming to its 9-month earnings, its revenue has risen 18% year on year, and its EBITDA and net profit have also risen with 27% and 65% respectively. Now there are some past updates on the company. Firstly, its 100% subsidiary, which is Aeroloy Technologies, signed a long-term purchase agreement with Dassault Aviation. Now this multi-year agreement was for the supply of titanium casting parts made in India. Secondly, PTC Industries and Hindustan Aeronautics Accessories Division had signed an MOU, and this was for the cooperation for indigenization for various aviation grade raw materials, which was being built by HAL. Now, talking about its share performance, the share of PTC Industries has risen by almost 169% in the last 1 year and by almost 8% in the last 5 days.
Okay, Mika, thank you so much for joining us. Pardon me, Kanika, thank you so much for joining us and taking us through what's happening with PTC India. And again, crucial updates coming in with respect to this particular company, given the fact that we actually have some attachments with respect to the defense sector. And remember, the defense sector has been doing well. But very quickly, let me also address what's happening with HDFC Life. We've had earnings coming in, and your total income has come in. As well as your net profit, which does look like a growth. Remember that we were expecting a little bit of a decline when it comes to its annual premium, equivalent, and those are the numbers we are in fact keeping an eye on, and we should have that for you up on the screen as well. As far as your total income is concerned, we're looking at a growth there as well. So all eyes will remain on the annual premium equivalent as well as the value of new business added, and then of course you will have that VNB margins as well, or whether or not that has changed substantially. We're expecting a decline, but at the moment it does seem like the stock's holding on, and we don't have too much in terms of your profitability. Of course, has moved up around 15%, which could possibly have been largely in line with street expectations. It's a wait and watch on the granular details, but for now it seems like the stock is holding on, and largely, at least as far as your top line and the bottom line is concerned, largely in line with street expectations. There you have it. Just about tad bit higher than what the Bloomberg estimates were when it comes to net profit. Again, that's something that we will continue to keep an eye on and track. But on that note, let's get in Anushi, who's going to join us to take us through Techno, Electric and Engineering, another one on the radar when it comes to volumes. Anushi.
Right, as you mentioned that the stock is in focus on its higher volumes now. So Techno Electric's volumes are buzzing at about 4 times its 30-day average, while the stock did see an intraday high of about 9%. Now, no fundamental drivers as of driving the sort of performance that we are seeing, but we'll still go back to the order book and the kind of performance it has displayed over the quarters to get a sense of how the company has been doing. So if you had to look at the order book position, that stands at about 5,400 crore, with the top orders coming from players like Power Grid Corporation and Rajasthan Rajya Vidyut Nigam. So over here, based on this order book, we are seeing some strong top line growth going forward. Now 400 crore of growth what has the company had clocked in this quarter, but now they're expecting an addition of about 550 to 600 crore for Q4, and while going ahead into FY25, they expect the per quarter growth to be in the range of 800 crores, which will take their targeted top line to about 1,750 to 1,800 range in FY24, and double of that, 2,500 crore in FY25. Just to get a sense of the numbers also, like the base numbers, do note that the base numbers were weak because of the kind of activity that the company had been seeing in Q3 of FY23. So we are seeing some large growth numbers over here. Revenue seeing about a 76% growth, while the EBITDA was up about 141%, and the margin shifting to 17.5% compared to 12.6%. Now what the analysts are saying about this stock is, if you have to look at the overall ratings, 4 buy ratings, 1 hold rating and 0 sell ratings. So again, this stock has been in focus for quite some time, and we'll continue to watch out for any fundamental drivers going forward.
Thank you so much, Anushi, for that update. Up next, we have a broking firm, and that is Angel One, who posted its Q4 results yesterday. Now, the stock has pared all of its gains throughout the day. It's down in the red, down about 0.5%, but it did reach an intraday high of 8.7%, and volumes over 3.6 times the 30-day average. Now, this was on the buzz, and the stock uptick was in the back of their Q4 numbers, where total revenues grew 63%, and the stable revenues came from even more than 5-year-old clients. Their EBITDA margins were at 39% versus 54%. The decline in the margins is largely impacted due to upfronting of acquisition costs, is what the company states. Net profit was up 31% at 340 crore rupees, and their total client base was up 61.5%. And it's to note that Angel One is one of the top ranking broking firms with about more than 50 lakh active NSE clients, and the expanding client base that the company is seeing is leading to the higher net broking income for the company. When you look at the gross revenue mix, around 68% of their revenue came from gross broking income, which was down 2% when you compare a year ago, and 85% of this gross broking income came from the F&O segment, which is the highest share, and 11% from the cash segment. Whereas in terms of interest and depository, interest had an 18% revenue mix, while depository was at 4%, both up 2% when you compare to a year ago. And one more key driver that has been driving the company's performance is the Fintech model. Now, the target addressable market has increased in terms of there's a lot of potential, because the Fintech modeling is enabling penetration for the addressable market. Currently, only 10.7% of the total population have Demat accounts, while 2.9% of the total population are active NSE clients, which gives a bigger picture of how much the addressable market could grow for this company itself. But it's time to slip into a short break, but do stay tuned. We have lots more lined up on the other side.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Welcome back to Large Trades. We are putting the spotlight now on Mtec. That's the one on our radar as well. Of course, it's going to announce its earnings a little later on in the day, but let's get in Rucha to tell us more about what's happening here. Rucha.
As correctly mentioned, Mtec will report its results today. Mtec is an enterprise digital and cloud transformation partner which serves across various industries. Volume and stock performance for today goes like volumes. It has volumes of over 8x of its 30-day average. It has hit its upper circuit at 20% because of because it has been awarded a place in the UK's Ministry of Defence Digital and IT Professional Services Framework, which is also called as DIPS. This framework has a budget of 1.2 billion euros over a period of 4 years. Secondly, it will also be a subcontractor for Fintech Limited to offer services like DevOps, app support and cyber security amongst other services. There are 5 brokerage views on the stock. 5 of them has a buy recommendation with an average upside of 8%.
Thank you so much, Rucha, for that update. Up next, we have Pre-Call, which is buzzing in trade, up almost 8% and on the back of higher volumes. And we have Varsha joining us with telling us more details about the stock. Varsha?
Hi Mihika. So yes, if you see, Pre-Call is buzzing today. Now volumes are over 5x of its 30-day average, while stock has seen an intraday high of 7%. Now this is on the back of Anand Rathi giving a buy call with target price of around 495. But let's look at what does this company do and what are the growth prospects of this company. So basically, this is an auto ancillary company which manufactures driver information system and sensors, then pumps and allied products for many of two-wheelers and four-wheelers. So their major customers include Bajaj, Hero Motocorp, Royal Enfield, Ashok Leyland, Tata Motors, Mahindra and many more. Now what's working for this company is, first is electrification of vehicles. So they are manufacturing a lot of products like disc brake and battery management system, which is something under development. In next 12 to 18 months, they would be launching those products for number of EV customers. Also, they are launching the new products such as battery management system and coolant pumps and oil pumps are under launch, wherein ED coolant pumps have already been launched during Q3 with both Tata Motors and Ashok Leyland. Also, they made a state-of-the-art driver information system for Dalma truck. If you see the growth prospects for this company, they've given guidance for FY26 where they see revenues of around 3,400 to 3,600 in terms of organic guidance and with margin of almost 13 to 14% by FY26. So this is all we have on Prycall.
Okay, Varsha, thank you so much for joining us and taking us through what's buzzing behind for Prycall. But let's move on and talk about well, the infra sector. In fact, infra passes damning order against Reliance Capital's auditors. But what about the perpetrators of around 7,000 crore rupees of fraudulent lending that the infra has pointed to? Former ICICI chairman Amarjit Chopra weighs in. Listen in.
See, so far as this NFRA order is concerned, it actually damns the auditors very badly. There are a large number of observations, but few of them, if I can summarize. Number one is that Reliance Capital made loans of about 12,500 crore rupees to its associates, subsidiaries, or other related parties, for that matter. Firstly, what has been stated is that the auditor actually didn't look at the creditworthiness of these various entities. These loans were not being repaid. Those companies were in losses. They were not creditworthy. They would not have been able to repay these particular loans. Second most important observation is that probably these companies didn't utilize the money for the purpose that they had actually been given loan for. Now, it may be said that it may be too difficult for an auditor of Reliance Capital to verify the end use of those funds at those entities. But somewhere or the other, probably it also brings out one particular fact that auditors need to be careful in future, particularly in the case of the NBFCs, that the loans which are being given particularly to the related parties, these are being put to the use for which these have been taken by those companies. Another very important observation that the NFRA has made in this regard is that when PwC resigned, PwC had made a lot of allegations and had gone even under 143(12) of the Companies Act to report the matter to MCA. What the audit committee and the board did, and I think they played very smart, they kept on alleging that all PwC observations were absolutely baseless and it had no meaning. What they did, that they told this particular firm, Pathak and Associates, that you look at whether whatever allegations have been made by PwC are correct or not. Now, firstly, I personally feel this was a special assignment. This should not have been taken by Pathak and Associates under any circumstances. They had no reason to comment upon the performance of PwC. Rather, they would have been forewarned on account of these allegations by PwC and must have a deep dive into all those matters which PwC had alleged against Reliance Capital. Instead of doing that, they went in and submitted a report which said that probably these allegations are baseless. Now, firstly, I personally feel this jeopardizes the independence of the audit. There was no way that they should have gone ahead with this particular assignment. I'm not privy to the information whether they charged any amount for this particular assignment or not. And had they charged it, I think it would have been more damning for that matter. And the other thing that one may like to say is that you just cannot rely upon a legal opinion absolutely blindly if the legal opinion is blatantly wrong. What has been alleged by NFRA is that whatever opinion they had taken, that was blatantly wrong. So, and the company had taken. And the auditors relied upon that particular opinion and then went on to give a report which should not have been given. And the other point that is that if these parties were not repaying and there was evergreening of these loans going on, probably they should have applied the expected credit loss model, or they should have gone for some kind of provisioning against these loans. After all, if the aging of these loans is to be seen, and which NFRA really talks about, if it is overdue by 6 months or 1 year, it's a different matter. But if it is overdue for years, some kind of provisioning is definitely required. You don't ask for it. When you go and issue a clean report, you don't get the provisions created against 12,500 crore of rupees. According to NFRA, probably a provision of more than 6,000 crore would have been created if they had followed certain provisioning norms. So that is where probably the auditors have been caught on a wrong foot, and all those consequences that they are facing today.
And with that, we're completely out of time on this edition of Large Trades, but do stay tuned that we have lots more lined up on the other side. India Market Close up next.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm
If one statement can put paid to the hopes of the market, I think we saw an exhibition of that today, because if you look at the markets before the last 1 hour of trade, they're down flat, but I use the term down simply because they were up for a better part of the trade. The intraday of the Nifty shows you that a sudden come off right here, a sudden come off on the markets around the time that those statements on the geopolitical front came in a little bit. I would ascribe that to be the reason. Maybe Tamanna has different thoughts to this as well, but this probably is the reason why the indices have done what they've done today. The mid-cap and the small-cap indices will come up on your screen very quickly before we talk about what's happening on the individual movers in the session today. So while the Nifty 50 is flatlining, remember the small caps started off very, very well. Even the mid caps did, and while they also had a bit of a skirmish, they're still in the green. The mid cap index about 0.5%, and the small cap index even more so, about 0.7%. So good going for the broader end of the spectrum for sure, which explains the market breadth, albeit a bit constricted than before, but still in the green. Let's get the heat map up on the screen for the Nifty and show you what's moved on the Nifty and what's not. A bit more red than what there was at the start of the trading day. As you can see, almost even Stevens, with heavyweights like HDFC Bank also in the red. But the key culprits, Nestle, and not surprising that it's met with this fate, 3.5% lower in the session today. From a consumer perspective, arguably the biggest news story of the day. Some bit of pain points for Axis Bank, Titan, ONGC. It's across the board really. There's no specific pocket which has been chosen specifically for punishment. Bharti Airtel, on the other hand, 5% higher for this one. Really strong showing. Actually, Telecom per se has had a really good run today. You have Bharti, and I'm sure Tamanna will speak about Vodafone, Indus, etc. All of those have done well. There is Power Grid, which is up about 2%. Bajaj Auto, out of the numbers, 2%. And some strength for the beleaguered tech companies, the likes of TCS, LTIM, and Infi, amongst others, which have done well for themselves. But Tamanna, the broader end of the spectrum, much more active today and much stronger than what the headline large caps are currently.
And frankly, it's all about the numbers. Very, very clear reaction to corporate numbers. I reckon from what we've seen so far, it's not looking too bad at all. Q4 so far is looking very good. Of course, we'll hold our horses till all the big numbers come. Remember, just in about an hour or so, you will see what Infosys numbers are looking like. You'll see what Bajaj Auto is looking like. So do stay tuned for all that and more. Now, some of the stocks that we are highlighting, and yes, absolutely, the jury is out whether a comment from the Israeli defense minister has spooked the markets, or is there more to it? Qatar looks like it wants to stay out of this whole situation, but frankly it's difficult to say because Israel's position has been known for a while now. Having said that, let's just move to the big stories this afternoon and the big movers this afternoon. Just Dial, definitely on that list. Yes, Vodafone and Indus Tower is eye-popping, but Just Dial is truly, truly eye-popping. I want to move that down so we can actually see what the stock impact has been. Yeah, 12% up on Vodafone, on Just Dial. Spectacular numbers in this quarter, which has seen Just Dial doing absolutely well. We spoke to the management today and we'll play out an excerpt of that conversation. You should stick around, stay tuned for that. Vodafone's the other story, and with that I would add an Indus Towers just because of impact. Is the stock of the day, off its highs of the day, but Indus Towers in the anticipation of some debt repayment once Vodafone gets some money, essentially over 4% up. So movement there. Nestle, it's something Neeraj just perhaps addressed, but I just want to come back to it and how sometimes just a lack of corporate governance is also punished by the markets. At least that's what we're seeing today, 3.5%. And just one astonishing fact, Mahima, my colleague, pulled out that in India, in the baby food segment, Nestle has a 98% market share. That means people today who are seeing the news that they put too much sugar and don't want to go for it, don't really have an option. All right, Biocon is the other one that we should address. They've signed a pact for generic Ozempic. This is in Brazil, but having said that, that's really the big drug everyone's talking about. So Biocon up. I don't know if you can pull up Spark. They're now getting beaten down because of a clinical trial which didn't work, and we'll try and get up Spark. But meanwhile, Angel One also, because you're seeing movement there because of results, and you know, Angel One was up all day, now coming off because basically its margins aren't great. The numbers are looking fine, but the margins aren't great for Angel One. That stock down. We just had Spark a second ago, so we'll pull that back up and I'll tell you what's happening with Spark. They were doing a clinical trial for a very important drug which has failed. It's not really showing that kind of a relief for Parkinson's actually, so they've suspended that trial, and Spark has been hit consistently in the last several sessions, down another 5% today. So these were some of the key movers, but all focused now on the companies where numbers are going to come in a bit.
It's certainly an important afternoon, and we'll get to some of those as well. And let's start getting in some views around some of these specific names. And of the market wide. Aditya Arora, founder of Adiltic.in, to talk about the technicals and the derivative position. And after a really long time, presumably for the first time on India Market Close, Gurmeet Chadda, Managing Partner and CIO of Complete Circle Consultants. Gentlemen, both of you, thanks so much for joining in. It's been a while, Gurmeet, that we've spoken, so great having you. Aditya, good to see you on the show as well. Aditya, can I quickly start with you first though? Just a word on the charts. I mean, they've just come off a little bit. Is the market looking skittish or are you constructive? And what are the stocks that you're recommending for this afternoon?
Very good noon to everyone. I think market structure isn't very positive if you look at the immediate short term, because the derivative data buildup which we saw yesterday was again negative, and it has been negative since last few days. So I'm not aggressively bullish on the market, but these levels offer an opportunity to accumulate stocks. Like commodity sector is doing pretty well. So I'm constructive over them, constructive on metals specifically, constructive on sugar counters. So these things are doing pretty well internationally, and those positive sentiments should trickle down over here as well. On index level, I would like to wait and watch, once again, when the momentum comes back in the market, and once we breach 22,500, then I would be pretty positive on the market on Nifty. And on Bank Nifty, I think these levels are pretty good. 47,200 at these levels, I would be bullish on Bank Nifty, keeping a stop loss at 46,800. And I would be looking at upside of 47,500 to 47,900. And the stocks which I'm looking is, I think markets are pretty volatile these days. So I would like to go with little defensive counters, which are not very sensitive, but today they are doing pretty well. First pick would be Bharti Airtel. Stock is doing pretty well today, up 5% or so. So this could be bought at 1281, 1210 would be the stop.
Okay, Aditya, I think we've got a slightly patchy line. We'll try and get that. But if we have the stock ideas, maybe we can just pull them up as well. But clearly, Airtel looks to be one stunner out there. And frankly, it seems that Telecom might be a stunner. We'll talk about Telecom in just moments from now. But Gurmeet, just an initial thought. Have you been buying recently, or are you biding your time a bit?
Neeraj, on Bharti or markets in general?
No, markets in general. We'll come to Telecom in a moment, but markets in general first.
No, so I think one thing template has been clear for some time. I think it's been a buy on dips market. We have to take a view. I think our view is we are in a bull market, and bull market moves are sharp. We saw that sharp moves when stress test happened in small and mid cap space. We saw one day fall in small cap index by 7-8%. I think it was in November. When the US 10-year crossed 5%. I think that's, in the short run, that's something which could be some bit of an indicator in terms of whether you want to go a little overboard or want to keep some dry powder. Whenever the 10-year has crossed 450, I think there has been some flight of capital, mostly from risk assets, especially emerging markets, and that has led to some bit of that. So I think we are firmly in that camp. Core inflation minus food and energy is 3.8 for India. FX reserves are shaping up well. You look at PMI, all macro indicators are solid leaders. I think we are the only market which got an EPS upgrade last year. So I think this geopolitical uncertainty, I think sometimes it's just better to wait it out. So for now, I think we are saying not doing anything is the best thing to do. And if the market will give some indication in form of some downward pressure in the yields on the 10-year, on the gold prices, etc., that's when you get a more formal view in terms of whether to add more in this decline or not.
Yeah. Good afternoon, Gurmeet. Tamanna here. I was just curious what your theory is for what caused the mid-market dip today. Was it a geopolitical statement? And how heavy are these kind of statements or saber rattling going to hang on this market?
See, I think it's a combination of today being Thursday and some statement coming from the Israel finance minister. I think my personal view is there could be some horizontal escalation, knowing kind of response Israel has had so far on this, and this could lead to some bit of spike in oil prices and some turbulence here and there, and that's why the market is a little bit nervous. But I don't think so. It has the potential of that theory of stretching into World War III. I think it looks a little overdone to me. But as I said, sometimes it's just better to wait it out. And anything where India falls for non-India reasons in the past has been a great opportunity. Whether it's been Russia-Ukraine war, Israel-Hamas conflict, you can go on for last 10 years. Whenever it's been for non-India reason, I think the key thing here is that you be in a portfolio which has earnings growth. I think that's your biggest hedge in the market. Get into stocks which have good momentum, good growth. I think that should help you well once these things settle.
That's a good point and a great quote as well. Whenever there is a fall in the Indian markets for a non-India reason, it becomes a great opportunity. Another opportunity which could present itself for investors is the Vodafone FPO. Is it truly an opportunity or not? Smriti has broken it all down, all the pros and cons. Smriti, what conclusion are you coming to?
Well, I'm going to give you the positives and negatives on that one, but let me start off with the key numbers here. Now, this is an 18,000 crore FPO, which is the biggest FPO till date. Now, out of this 18,000 crores, the anchor raise was about 5,400 crore, which hits the upper limit of 30%. That's what anchors, that's the limit that anchors can put in the money. Now, the price range for the FPO is 10 to 11 rupees, and the anchor bids were at the higher end at 11 rupees. Promoters have also infused some capital of about 2,075 crore. This was even higher. So it was at 14.83 rupees. Now, if you look at some of the positives that come out of it, within the anchor raise, we saw some marquee names like GQG putting in the money. And GQG was one of the biggest investor into the anchor, among the anchor investors as well. It invested about 1,348 crores and was given about 25% of the total anchor raise. Then we saw some other names like Fidelity Funds come in with 774 crores. They've put in that. Red Wheel Funds about 281 crores. So big names there. So that seems to kind of show the confidence in the company. And we also saw some domestic funds like HDFC, Motilal, BNP Paribas, 361 funds come in and put in money, and the domestic was about 16% of the total anchor raise. But let's talk about how they're going to use these FPO proceeds. Now, they plan to put money into 5G, to roll out 5G, and the company has a target of covering 40% of their total subscribers in the next 2 years itself. They also plan to expand 4G services. So that's pretty much the plan for using these proceeds. Now, another positive for this is government support to this FPO. Government has come out, including the finance secretary, who's come out and said that they support this fundraising. So that's another positive, that the government is not going to let this telecom major die. So that's another positive into that. And you also look at some street expectations. They're giving revenue expectations to their investors that they're going to raise from 40,000 crores to 75,000 crores in the next 2 years itself. They plan to migrate 2G customers to 4G. Now remember, they have 43% of their subscriber base is 2G. So big opportunity there, the conversion to 4G. They also expect tariff hikes in the next 2 years itself. And we're looking at 20 to 25% of tariff hikes. However, there are some downside risks as well. The gross loan for the company stands at about over 2 lakh crore rather, and 90% of that is owed to the government. Now, these payments will become due post FY26. So in the second half of FY26, they'll be liable to pay about 30,000 crore, out of which 28,000 crore will be towards the government. However, the company has time and again said that they may utilize a relief package, which is essentially converting government dues into equity. So that's the option auction that they have been talking about pretty much a lot. Now, so that may play a major role in dilution of equity. We're anyway going to see about 26% dilution post this 20,000 crore fundraise. So that's another downside to this as well. And the last but not being the least, they have lost 5.6 crore subscribers since Jan of 2021. So to bring that sort of subscribers back into the company, especially when you're also hiking tariffs, now I understand that will be across the industry, but that's something that we'll watch out for.
Okay. Smriti, thanks a lot for that. So that's the pros and cons of Vodafone. By the way, keep an eye out for the market as well, and we'll get to that. But since we're on the topic of Telecom and Vodafone, Gurmeet, would you be tempted to put in money into Vodafone? And what's happening with Bharti as well? It's been on a roll today. There is also some very strong traction seen in Indus Towers.
I think Bharti has been on a roll for almost 2 years now. I think I remember getting stuck in a range for a while. And I made this discussion when we used to interact that you can't have Jio at more than 100 billion valuation. Now, obviously, Jio platform is around close to $150 billion valuation, and Bharti being 50 billion. Today, I think crossed ICICI Bank's market cap, if I'm not wrong. And great additions on 4G and 5G. I think on a quarter-on-quarter basis, they've been adding 6 to 7 million on 4G, 5G. Industry-leading ARPU. The digital portfolio seems to be doing well. The home broadband business doing well. And some stability even in the Africa business. I always believed that Bharti was slow on payment banks and digital. It could have done much better with the kind. It was the first to get that license. I think I see more value unlocking there. Bit of a rub-off from the Bharti Hexacom, its subsidiary IPO as well, which got a very good response. My sense is this, it will eventually become a 2.5 pair. It's already a 2.5 pair. Vodafone Idea, probably in my view, I'm a little concerned on equity dilution. If government converts the dues to equity, it will almost be 80% kind of holding for government, and 18,000 crore isn't much. It will be used to first enhance 4G sites and then get to 5G sites. So there's already a gap. And post-merger, Neeraj, if I'm not wrong, they've lost 19-20% market share. They had almost more than 42, 43 crore subscribers, if I'm not wrong. It's down to about 22. So I don't know. I'm not too sure. In fact, last 2-3 years, a lot of people have wasted their time on analyzing too much on Voda, Yes Bank, Z, etc., and probably have missed the entire bull market.
Okay, fair point. Okay, we'll take the views from Aditya on the other side of the break because we really need to slip into one. Aditya, just stay on because we would love to come and talk about the markets with you a bit because the markets have taken a turn for the worse, by the way. Before we take that break, just look at what the indices are doing. Bank Nifty in particular, but the mid-cap index too has slipped into the red. And there is a bit of a pullback in the Nifty 50 from those levels at the lowest point of the day currently. Quick break. We'll be back with more in just moments from now.
We are joining NDTV's Pledge to Vote initiative. I pledge to vote and also encourage all of my colleagues to exercise their voting rights. Election is the largest celebration of democracy, and we fully support it.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to...
Welcome back. Now, markets have taken a turn for the worse. Where and when exactly has this statement come needs to be seen. Is that what is spooking the markets? A statement doing the rounds of the Israeli finance minister saying that we will retaliate in a way that Tehran rocks. Now, remember, the expectation of the market is that whatever had to happen is done because of the 300 missiles that Iran rained down on Israel. One got through, 99% just did not, and there were no fatalities. So the expectation was that there won't really be too much of a tit for tat going on and escalation. The fear is that that's not necessarily going to be the case. That's why you look at the intraday chart of the Nifty and the drop over there. Meanwhile, among the top losers, of course, is Nestle, but for other reasons, their sugar shock is what is spooking the market today. Aditya Arora with us, so is Gurmeet Chadda. Aditya, I'm going to come to you, on your top picks first, because I think you started talking about Bharti Airtel and then you froze. So I want you to complete your top picks and then give me your take on a Nestle and a Just Dial.
Sure. So my first bullish bet would be Bharti Airtel. I see a fresh rally starting over there. Second would be 361. That stock looks pretty good and it's showing good relative strength, wherein other pairs are just falling apart and market is seeing good correction. So this stock really stands out. So one could buy this stock at 796, 746 would be the stop loss, and 900 to 1100 would be the target. And the third one is Geo Finance. After this news that they are entering broking business, stock is showing good strength. So this could be again bought at 380, 350 would be the stop loss, and 420 to 439 would be the target.
So Geo Financials is the other one on Aditya's list. What about a Just Dial? What would you do with a Just Dial today, Aditya?
I think there are times when Just Dial simply rallies away and it shows high beta moves. And we have seen this many times in the past. When a fresh rally starts in Just Dial, it just doesn't fizzle out in one day and it continues for some days. So my view is in tandem with that. I think Just Dial could be bought at current market price of 1016. Stop loss must be 920 and target would be 1100 to 1150.
50 is the upside that you see on a Just Dial. They've reported, of course, a healthy set of numbers. The stock has surged over 12, now 14%. We spoke earlier in the day to their CFO Abhishek Bansal on their traffic breakup and growth targets for the upcoming quarters. Listen in.
So traffic-wise, incremental traffic largely is coming on mobile platforms, which now form about 85% of our overall traffic. So it's this 85% maybe could go to another couple of percentage points higher, but growth is being driven largely by mobile platforms. So while we don't issue any formal guidance, but as a business endeavor is to grow top line at 15% plus growth rates, which again should materialize from a mix of both volume additions as well as ticket size growth. For example, Q4, we had about 8.5% growth in campaigns on a year-on-year basis, another 7.5% in our realizations. On margins front, we exited the year at about 26%. And for next full year, we are targeting that we should comfortably be 25% plus. There is obviously scope for margin expansion as well, since there is inherent operating leverage that exists in the business for top line growth anyway beyond 8-9%.
Gurmeet, did you get a chance to look at the results and hear the commentary of Just Dial? I mean, the cash on the books is there, the growth numbers, 10-15%, whatever they do, at a 7,500-8,000 crore or whatever it is the market cap is it attractive a proposition?
Neeraj, this business, which is B2B essentially and a platform business has multiple variables. And Just Dial obviously has had a change of promoter. It's been good numbers, must admit. We also track India Mart, not exactly strictly comparable, but we do that. We believe that can you hear me? There's some.
Sorry. Okay, I think we've just. It's an unusual day when we are seeing these glitches keep on coming.
While we talk about how well telecom stocks are doing.
Think about it.
Connectivity.
It's just quite funny. But yeah, well, Just Dial. certainly done well, and Aditya has already given his view, but pretty interesting as to what's happening to that stock. The other one, really, the team of stocks which stand out today are these real estate names, right? Just the kind of moves that some of them have done after their monthly sales or the quarterly sales numbers are out, and TARC or a Brigade Enterprises, the two of them in particular, maybe even a Suntech Realty, I think they've just done so well today. It's quite exceptional. Now, Aditya, did you get a chance to look at the charts of a Brigade or a TARC or a Suntech Realty?
Yeah, absolutely. I'm checking the charts of these counters. Among these, I think Suntech looks pretty good. So I have a bullish view on this counter. I think this could be bought at 437.95. One must maintain stop loss of 410, and target would be 470 to 490. And second one you talked about was Oberoi Realty?
No, I asked about Brigade Enterprises.
Right. I think Brigade looks, it's trading in little bit of overbought zone, and over here the stock is facing little hurdle at 1050 level. Until and unless 1050 levels are not taken out, 1050 to 1055, these kinds of level are not taken out, stock would probably face some tough time to make new high. Once 1055 is taken out, then we could maintain the bullish bias. Otherwise, I would stay neutral at 1036.
Okay. Stay neutral otherwise. TARC is also done well, so watch out for those. In fact, speaking of Brigade, well, it soared 6% though, and we had a chance earlier in the day to speak to Joint MD Nirupa Shankar on rising realizations and where the consumer appetite lies. Listen in.
I think the market as a whole has been very good in terms of the consumer buoyancy and the consumer appetite for completed assets and new launches. So we've been able to increase our prices by almost 20% in the last year or so, just because the appetite is there and the demand is there. It is primarily end user driven. And there is demand for all sorts of real estate asset classes, whether it's plotted, whether it's mid-income, whether it's high-end apartments. I feel that any launch by a reputed developer with a good location, a good plan is able to sell well, and we've been able to make good of that market situation as well. Even high-end villas that I would say prior to COVID were pretty hard to sell. There were a very small percentage of people that would actually buy these high-end villas. But right now, even the high-end segment is doing extremely well. The average ticket size in Bangalore, I would say prior to COVID, used to be around 60 to 80 lakhs, maybe pushing up to even 1 CR. But I think now we're seeing the sweet spot for the Bangalore real estate market actually going much higher to at least 1.5 to 1.7.
And well, just before we take that break, though, there are some news flashes on your screen. Nestle has come out. We spoke about this in the morning, that the market will make people realize about what's happened here. There are a lot of angry parents out there, angry consumers out there, and as they should be, but Nestle is saying their infant cereal products are manufactured to ensure appropriate nutritional quality. If I'm not wrong, I read that. We never compromise and will never compromise on the nutritional quality of our products. Well, compliance is an essential characteristic, sure. So all of this notwithstanding, Tamanna, it's an issue that is larger, and it's not just about just basic nutritional quality in a product, absent or not, but also what is present versus what is present across the world.
So that is the issue, and you're right, it's bigger than just Nestle in India. It is Nestle in other parts of the country. The question is also for our own agencies and FSSAI, the ministries, what are they allowing? Essentially, a Swiss agency found a survey that the content of sugar in Nestle baby products in India, in Africa and Latin America is much higher than in European and American geographies. In fact, in India, it's about 3 grams for a 30-gram serving, so that's nearly 10%. And this is really, really bad for kids, and these are small babies. Sugar can cause diabetes, obesity, a whole host of issues. And this is why you've seen that stock also respond quite badly today. Nestle India now putting out a statement saying that this is appropriate, etc. It's by the rules, and reduction of added sugar is a priority for Nestle India. But what was happening so far? How long has this been going on? Additionally, like I was mentioning, they have 98% share. So there's nowhere else to go. And for very small infants who cannot have mother's milk, there is nothing else to have except formula. So it's not as if you have a lot of option either. It makes it even a bigger concern.
Yeah. Well, the market's verdict out there, quite frankly. Sure, what we'll do is we'll take a break on this note and digest this piece of news. In fact, get in a fundamental guest to come in and talk about this as well as talk about this with Aditya. Gurmeet, take a moment to thank you, of course, for joining in today. Stay tuned, viewers. Also, some derivative updates, maybe on Nestle as well, and some top BTST ideas. Stay tuned.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to...
All right, markets wobbling a bit over the last few minutes. Let's quickly just pull up the intraday and the Nifty contributors to give you a sense of where that pain is coming in. Markets almost at their day's low, just 10 points off their day's low right now. And really, you've seen an HDFC Bank weighing heavy there, being balanced to some extent by a Bharti, which is having a great day. Otherwise, it would have been worse. So your banking pack not doing too well. Your HDFC, Axis, ICICI Bank all of them in a bit of pain. Agam is there with us today. Nifty expiry day, Agam, and a bit of an afternoon shocker. And volatile swings. Did you see those trends play out?
Tamanna, I believe that a lot of traders out there who had sold puts or perhaps were long futures are stuck in their positions at the moment, especially those who are trending in options. At one point in time, when the Nifty dropped, well, you know, your options worth 5 points and 10 points went all the way to 150 to 200 points. So you can imagine the kind of carnage that has caused when it comes to those option sellers on the put side of things. Now, a lot of them are trapped at the moment, unfortunately, and at least as far as the expiry is concerned at the moment, we are seeing them unable to come out, and which is why we saw that selling pressure will further exacerbate over the last 15-20 odd minutes as we move towards closer to expiry. That said, we have seen about another 5% increase in open interest as far as the Nifty futures are concerned, and the Bank Nifty again, we're looking at a knock of another 1%. Well, it will come and sit at a base of 47,000 as we move into trade tomorrow. Well, that's where your next level of support is as far as the Bank Nifty is concerned. In terms of options, and you know, this is what I was talking about. Earlier on the session, we saw the Nifty move higher to around 21,100, 21,200. That is where we had seen a lot of writing around 22,100 and 22,200 puts. But that has changed substantially over the last 2 hours of trade. I just want to take a look at, so this is your overall open interest distribution. That has changed substantially. Let's move on and talk about your overall open interest distribution. At the moment now, we may be seeing a lot more traction around 22,000, and we have lost out on that mark. And there are still a lot of put sellers just sitting and perhaps hoping that there could be a recovery over 22,000. It's going to be very, very unlikely that we're going to see the Nifty close above 22,000 in today's day of trade. And I reckon this must have also forced out a lot of hands for those who, as I mentioned, who may have written certain puts at a premium of anywhere between 10 points to 50 points, and they were forced out at, well, maybe 2 times, 3 times the option premiums they were hoping to make in today's day of trade, which is why expiry trading is always a very, very dangerous game, and you have to know what you're doing. Let's talk about stocks then. And in terms of stocks, of course, we're looking at shorts, which would include something like an Exide, where we're actually seeing a little bit of a reversal there. IG, Dr. Reddy's, Apollo Hospitals, and among stocks which are seeing unwinding. Again, about a short covering for Vodafone and RBL Bank, but other than that, we're seeing some weakness in Tata Communications and Escorts as well. While today's focus was meant to be on the stocks, it does seem like the Nifty's taken over, and the volatility has certainly claimed victims today.
Absolutely. The Nifty now under the 22,000 mark. And dipping lower as we speak. So definitely a lot of pain points there. Sudeep Bandyopadhyay now joins the conversation. He is Group Chairman, NDTV Capital. Sudeep, good afternoon to you, and thank you for speaking with us today. What do you reckon is spooking the markets right now, and would you wait for things to settle, or do you see opportunities to buy into these drops?
Well, I think what is spooking the market is, of course, the weekly expiry. A lot of positions are, there on multiple sides, and I think that's leading to all this volatility in the last hour. As far as taking positions is concerned, if somebody is wanting to accumulate good quality stocks for long term, of course, this is an opportunity. Also, but I will always advise that don't buy whatever you want to buy at one shot. Buy something today and maybe wait. And let's see what happens, in market opens tomorrow.
Let's just pull up very quickly what is working on the markets today. And it's a day of telecom. We've been speaking about Bharti Airtel doing very well. What's not working, on the other hand, is a Nestle and healthcare. I would say the healthcare pack also seeing a lot of pain. I'm just going to come to the story on Nestle for a second and then get in views of our analysts of what to do with that stock. So there are two parts of it. One is how the stock has dropped off about nearly 4% as we speak. One analyst on our channel today thought it's a buying opportunity, but what really is happening and why is Nestle taking a beating? Sesha Sen has all the details.
If you are a parent and have a kid at home, you will be shocked to know what I'm going to tell you now. A new study by Swiss investigative organization Public Eye has revealed that Nestle, which is the world's largest food company, uses excess sugar in its baby food products in India and other developing nations. Nestle uses 3 grams of sugar in every serving of Cerelac sold in the country. I'll ask my camera person to show you the label of Cerelac. So if you look at the label, Nestle says that it uses 9.1 grams of added sugar per 100 grams of Cerelac. This essentially means that the company uses 10% of its sugar in about 25 to 30 grams of Cerelac. Now, what is even more shocking is that in developed markets like Europe, there is no such added sugar that is used in their products. This raises two serious questions. One, is Nestle putting children's health at risk in a country where several studies have indicated an alarming rise in obesity among children? And the second, are there any guidelines or a law that checks promotion of such products in the country?
So that is the essential story of why Nestle is under pain. Nestle has put out a statement a short while ago, and we put that out on our screen. But just to reiterate, they've said that the cereals are fine, they're working towards reducing sugar, etc. Now the question is, should you buy Nestle stock on dips at this point? Listen into what Rahul Arora of Nirmal Bang has to say. It's quite a contra view.
You'd remember when the Maggi crisis happened, the way Nestle was able to go back to the drawing board and not only reinvent itself, but come back with greater market shares and the kind of numbers it has delivered since then it had not delivered pre the Maggi crisis. In the West, if you look at Coca-Cola, for example, they actually have adverts on their television telling people not to consume Coca-Cola, for example, because of the amount of sugar that they have, but they leave it in the hands of the consumer. But should Nestle be required to take corrective actions? And by no means am I justifying, the findings of this report. Of course, coupled with the fact that royalty increases were also announced recently. But I think if any remedial actions are to be taken, I think Nestle is more than capable of taking it. I think it's a household name. And I think any dips into this stock should be bought into. I mean, it's 100% plus return on equity, capital employed, return on invested capital business. It's growing its earnings by 15%. Any such opportunities, I think, while unfortunate, could potentially present themselves as buying opportunities.
Yeah, is this a buying opportunity? Sudeep, I'm keen to know your view.
Unfortunately, yes. I mean, there's a moral hazard and the entire, discussion around this unfair treatment for, the product as far as India and other poorer nations are concerned. So obviously it's unfair and probably not warranted. But as far as the market is concerned, I think what Rahul mentioned is absolutely correct. And I was going to say the same thing, that we have seen this happening during the Maggi controversy, how, robustly Nestle came back and delivered post that controversy. I'm reasonably confident that Nestle will do the same this time as well. So, if you're an investor who have, let's say, 1 year plus time horizon, this is a great time to buy Nestle because, this is where the price is getting corrected. Maybe there'll be a little more correction. And this is the opportunity to buy Nestle.
So while we're telling you about, what the story is, the response, central government is going to be looking into it. That's another part of the story, and that of course will continue. But in terms of an investment opportunity, Nestle looks good, says Sudeep Bandopadhyay as well. Aditya, what's your view?
So looking at the charts, I believe that Nestle, look, I would prefer the stock to give a breakout first, because in such scenarios, any negative news could give another gap down on the stock. So in such kind of scenarios, I would prefer a breakout. I would prefer to buy higher, but I want a confirmed entry wherein, post entry, it can give a short term good move on the upside. In that kind of scenario, I would prefer a entry above 2650. Post that, I feel that Nestle could again take out its previous swing high that are placed at 2760, 2780. I think once the stock crosses 2650, we can go towards these levels of 2750, 2800.
All right. Now, while that's the story with Nestle, the fact is that market is looking wobbly and a bit spooked, frankly. Bank Nifty is the one showing the greatest amount of pain among the sectoral indices. In fact, let's pull up the sectoral indices and look at the sharp drop in the Bank Nifty just in the last few minutes or so. And there you have it. Yeah, PSE is doing badly. Coal India today is particularly hurting. FMCG probably being dragged down by Nestle, etc. But you've also seen the Bank Nifty and heavyweights there in a bit of pain. Axis, like I mentioned, Axis, ICICI, IndusInd among them seeing the biggest knock. Sudeep, in terms of numbers coming up, and that's the big trigger, apart from what's happening geopolitically, globally, numbers are the big trigger. Let's talk a bit about Infosys and Bajaj Auto. Numbers expected after market close in both cases, or maybe in the next 15 minutes. I don't know if you'll see the first hit of Infosys numbers, but at least Bajaj Auto after market close. How would you position yourself on some of these counters, and is there a Q4 numbers kind of play that you have in mind? What would you be looking out for?
Well, as far as IT is concerned, our view has been that it will be a mixed bag, and that's been proven right. If you look at the TCS numbers which they came up with, it was good set of numbers that did beat the market expectations. Exit margin of 26% was very good. And management also very clearly communicated that FY25 is going to be better than FY24. So I think all this, they're ticking the right boxes. The only problem were in two counts. One, North America. Second, BFSI. Now, these are important areas. North America hasn't done well and BFSI hasn't done well. So these were the niggling worries in TCS results. And I think these are going to show up again in Infosys numbers which come out later today. And now one has to see how Infosys has managed to cover those dips, North America and BFSI, through other geographies and other verticals. Now, TCS did that very well and increase margins. Will Infosys be able to do that? I think the answer, as far as market is concerned, is no. Infosys will not be able to do that, and that's why we have seen sharp correction in Infosys over the last many days now. And our feeling also is Infosys numbers will not be anything great to write home about. But let's see, wait and watch. As far as Bajaj Auto is concerned, we expect a good set of numbers. Domestic, they have been doing reasonably well for quite some time now. And the niche which they have picked up is the mid-market, not the top end, absolute top end, not the absolute bottom end, the mid-market. And that's where they're growing and they're gaining market share on a continuous basis. As far as exports are concerned, they were suffering for quite some time, but I think things have changed and things have picked up. I think, monthly, the numbers which the company comes up with very clearly shows that. The buyback and everything else has also created an excitement around the stock. It had gone up and now corrected, but again it has started moving up. And we believe Bajaj Auto numbers will be good and they will support the price where it is.
Yeah, Bajaj Auto also a lot of buzz about their CNG bike launch in June. And, at least that's one stock which has done particularly well, 114% up in the last 12 months, holding up even on a otherwise pretty tough day. Now, we were talking about Infosys and they're set to release their numbers in just a bit from now. Rucha is joining in with a quick preview of what you can expect.
Yeah, so Infosys is set to report its result post-market today. Revenue is expected to have a negative growth, while EBIT and PAT are largely expected to remain flat. The guidance is expected at 3 to 5% for the revenue in constant currency terms, while EBIT margin guidance is expected at 20 to 22%. While EBIT will be impacted by 1 month of wage hike, there were no large deal wins announced by the company in the fourth quarter. There are 3 key things to watch. Number 1, the guidance for revenue as well as EBIT margin. Number 2, what is the deal wins pipeline, and as said for TCS, are they getting converted into revenue or not? Number 3, commentary on the demand environment, and are the clients incorporating more of discretionary spends, or are they still skeptical about the same?
All right, so that's what you need to watch out for as far as Infosys is concerned, and obviously you'll see the quickest updates and analysis right here. Aditya, I just wanted to know your take on an Infosys and Bajaj Auto on the charts.
Sure. I think Bajaj Auto looks very fantastic on the chart, and it already had a stellar run since levels of almost 4,000-5,000, and it has touched levels of 9,000. I think this stock has more to go. I think I would say that more outperformance is likely over here. So I would say that bullish bias is still maintained on this counter, and probably it can again reach new highs, which are placed at 9,300, 9,350. So I would maintain my bullish view over here. And when it comes to Infosys, I would again maintain bullish view over here, because the difference between Nasdaq and Nifty IT is so big that any reversal over here could trigger a very good rally in a lot of IT counters. And we know that Infosys and TCS are heavyweights in Nifty IT pack. So I would maintain my bullish bias on Infosys at levels of 1420, and I think one could accumulate the stock in these levels, because when the results would be announced, we can see some volatility, and my upside target would be 1530 to 1600, and I would place my one-day closing basis stop loss at 1370.
Okay. 1370 is the stop loss that Aditya would give for an Infosys, and he's bullish actually on both, awaiting those numbers shortly. Meanwhile, another space that has not been doing too badly is your upstream oil companies, and Mihika is joining us now for an overview on this set amidst crude windfall tax, which has been raised. Yes, Mehika.
Yes, so Brent prices are up 19.5% year to date due to tight global supply and geopolitical tensions. And the Indian crude basket price has also surged 17% year to date at $90.46 per barrel in April. Now, higher oil prices is potentially very positive for the upstream companies like ONGC and Oil India. But however, the windfall taxes levied by the government limit the kind of potential that they do have. Now, the windfall tax was raised to 9,600 per ton 2 days ago, which is 4 times the January rate. But there seems to be a somewhat cushioning mechanism. So when you look at the realizations per barrel, which is derived from subtracting the windfall tax from the Indian crude basket price, the realizations right now stand at $77.29 per barrel, which is higher than any of the previous 3 months of 2024, where the average crude basket price was actually lower than what it is right now. And when you compare it to the historical time periods as well, the monthly crude price baskets in the $90 range. For instance, in October 2023, the crude basket was at 90.08 per barrels with windfall taxes of 14.57 per barrel, but realizations was 75.51 per barrel, which is lower than what we are right now, despite having an average crude price standing higher. Now, this suggests that the tax policy could have a possible cushioning mechanisms for the upstream companies, where despite the higher crude prices and the higher windfall taxes, the realizations allowed, which is technically the profit margin that the company could have for itself, stands higher than the historical prices.
All right. You're seeing a lot of those stocks come off their day's highs. Like many of components of the market. I just want to see what BPCL, HPCL is doing. HPCL was having a particularly good day at the start of trade, and yeah, most of them have come off their highs. HPCL still pretty decent, up in the red, up in the green, up 2% really. Aditya, anything you're tracking in this space and you like?
Yeah, I think I would talk about Hind Petro itself because that's an outperformer. The stock is, trading in a range, but once the market stabilize, probably there is more upside. We saw good upside in ONGC in last few days. I think HPCL could follow, but we would have a, level based approach in this counter. We'll be bullish in this counter once 495 is taken out. That would be the buy level. Stop loss would be 470 and target would be 515 to 525 would be the target.
Okay. Sudeep, your take on Hindustan Petroleum?
Of course, it's a good stock, good management. The only challenge is, elections are happening all around us. And, in this season, it's very unpredictable. That's what I would say, because the government will not facilitate or encourage a price rise in the bunk. And if the oil price starts shooting up, I think, the challenge becomes acute. And the HPCL, BPCL marketing companies will have to definitely bear a share of the loss, which they will then start accumulating in their books. And things will start going south. Under the circumstances, my recommendation has been that let this election period be over. Only then get into these marketing companies.
Absolutely. Now, talking about elections, and of course, the first set of votes will be cast tomorrow. Phase 1 begins tomorrow. In fact, a little later on at 3:30, we will be bringing you a special show on why Phase 1 is important. But meanwhile, we have been consistently telling you how rich your candidate is, and the spotlight today is on Tejasvi Surya, who's contesting from Bangalore South seat. Alex has all the details.
Absolutely. Well, it's interesting. This young candidate has bet on equity in a big way, and you'll see why. Let's first look at the total gross total value of his assets. It currently stands at about 4.1 crore rupees, and it's roughly gone up as much as 4 times over the last 5 years, and quite a bit of that has to do with his equity investments. He's got fixed deposits of about 5.45 lakh rupees. That's actually reduced from 8.76 lakh rupees in 2019. He's got movable assets of over 4 crore. His taxable income in FY23 stood at as much as 44.13 lakh, and that's also a very substantial jump from 5 years before that, when it stood at about 5.13 lakh rupees. He had no mutual fund investments back in 2019, but then as of now, he's got as many as 26 mutual fund schemes, and that's perhaps a little too many. Having said that, he's got close to 2 crore invested currently in these schemes, and the biggest holdings are in small cap funds. So you'll see the likes of Kotak small cap, as well as ICICI Prudential small cap and the Tata small cap fund in the list of mutual fund schemes that he has. He's got cash of 80,000. That's more or less stayed constant over the last 5 years. Doesn't believe perhaps in holding too much cash. And he's got investments in listed stocks, which again, he did not have in 2019. And some of them include the likes of Dredging Corp, as well as BSE, which has done incredibly well, Everready, Indus Towers, Jagsanpal Pharma, as well as Network 18, Strides Pharma, and Tejas Network.
All right, so quite a portfolio there, and Tejasvi has bet on equity. It's worked out well, at least for him. So thank you for that, Alex. And remember, this is a series that we're putting out regularly on NDTV Profit. We're giving you every aspect of this election, but a little hatke. Not just what you will probably see on every other channel. Now, having said that, just a couple of minutes for close. And Aditya, any sort of BTST ideas?
Sure. My BTST idea would be on Bank Nifty. I would also say a disclaimer that we have advised this recommendation to our clients. So we are bullish on Bank Nifty. Currently, Bank Nifty is trading at 47,100. Stop loss must be placed at 46,700, and target would be 47,500 to 48,000. So we are playing a mean reversal, trend reversal trade in Bank Nifty.
Right, so Bank Nifty is the BTST trade that Aditya has. He sees a reversal coming in there. Thank you so much, Sudeep and Aditya, for speaking with us today. Just a couple of minutes to go for what is looking like a bit of a painful close for the markets today. It started off fairly okay, frankly, contrary to what expectations were. It seems there was a statement around 1:30, 1:45 India time from a government official, the finance minister, who's being quoted in Israel, saying that the retaliation to the Iranian missiles is going to be very harsh. That seems to have spooked the market. The Bank Nifty down 3/4 of a percentage point towards the end of it. I'm just going to pull up the sectoral indices before we go to the Nifty components and heat map, etc., because I want to give you a sense of what really has hurt today. And FMCG right on top of that list, probably more than just a Nestle, though Nestle was the big one. Finance, Nifty Finance, Fin Nifty, Bank Nifty, all of them really seeing some pain. The only thing working perhaps to some extent were media stocks, but very little weightage. Let's pull up Nifty constituents as well, the heat map first to go with, and look at what's happening there. Markets have shut there. Apollo Hospitals and Nestle there at the bottom. The entire consumer space, actually, look at a Titan also down 3%. So between these three, you're seeing a lot of pain, but what has really dragged down the markets today is an Axis Bank, a Coal India, counters like those which have seen a fair bit of pain today. Banks overall not doing well at all, and ICICI and HDFC Bank down 1% as well. On the upside though, Bharti has had a fabulous day, and it's the entire telecom pack. Is it something about a Vodafone possible revival which is a bigger threat to a Jio than a Bharti? I don't know, that could be one of the theories, but that stock up 4%. Bajaj Auto ahead of its results. Its Q4 numbers expected in a bit from now, doing exceedingly well. So is Infosys. Bajaj Auto has anyway been on a good run. Power Grid for a variety of reasons, but they're also raising funds, up about 2.5% at the end of it. I just want to pull up what the broader markets look like before we wrap up our summary for the day. And while you saw quite a bit of pain on the Nifty and Sensex, it was not too bad on the end of the broader markets. The Nifty mid-cap, of course, in the red, but mildly, the small cap, in fact, mildly up in the green. Just pull up the BSE top gainers, BSE 500 top gainers if you can, to give a sense of what was working. And you had a Just Dial there right on top. Q4 numbers is the reason for that. Mtec is another interesting one. They have a deal with the UK Defence Ministry, and that saw a huge upsurge in that stock in the second half of the day. So they were doing well. News flow coming in a jubilant Farmova as well. So these were some of the counters there. Spark, again, a tough day for that counter. So all in all, a wobbly end to an okay start. We'll have to wait and see how things develop overnight. In the morning, we will also have cues from an Infosys, Bajaj Auto, and a lot more. So stay tuned for all of that tomorrow in India Market Open. But for now, from me and the team that has put this show together, thank you so much for watching. We'll take a very short break, but we'll be right back. Stay with NDTV Profit.
Hi, I'm Rohit Kapoor. I'm the CEO of Food Marketplace at Swiggy. At Swiggy, we are in the business of offering our consumers a wide choice, convenience, and a multitude of options to choose from. Voting is something similar. It's about exercising your choice, exercising it responsibly, thoughtfully, after going through all the options that you have. So I will encourage all the employees at Swiggy, all our delivery partners, everyone at large, their families, and all of us, all consumers, to come out, and those who are eligible, vote and exercise your choice and make India always a better place than it was yesterday, because we all owe it to the nation and to ourselves. Thank you.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason.
All right, polling begins for the 2024 general elections on the 19th of April, that is Friday. Today we're talking about why Phase 1 matters, and it's the beginning of our special coverage of elections on NDTV Profit. Now, why Phase 1 is important is, of course, it's 8 union ministers, 2 former chief ministers, 1 former governor, and a whole host of heavyweights that are going to be in the fray from all the political parties. In fact, you're going to see about 19% of all seats will see votes cast in Phase 1. So it's a sizable number of seats as well, which are up for the test. It's important for the DMK and the India Alliance. All of Tamil Nadu's 39 seats go to vote tomorrow. On the 19th of April, so it's important for DMK and what the India Alliance can do. It's important for the BJP that has been hoping to make significant inroads into Tamil Nadu, and you can see that from the number of times that the Prime Minister has been there as well. Remember, there are key seats in Western UP that will also go to the polls, and that's one to watch out for. And of course, the BJP is aiming to win all 5 seats in Uttarakhand for a 3rd time once again. So for a variety of reasons, this is an important phase for the elections. Now, what should you watch out for? We have some of the best numbers guys, I would say. The pollsters who really track the numbers. They're not just talking about mood in the air. They have the data to back what they say, and which is why I'm glad to welcome on the show today Yashwant Deshmukh. He's director and founding editor of C Voter. Sanjay Kumar, professor of CSDS, is with us on the show, as is Amitabh Tiwari, political strategist. Welcome to all of you, and thank you so much for speaking to us on this special show today. Yashwant, let me begin with your take on Phase 1. We're kicking off a mega election. Now, for the longest time, at least, you know, when I speak to people in the markets and covering what the mood is, everyone seems to have discounted this election. There's no real buzz. Will we see that buzz beginning from tomorrow, and why is Phase 1 important?
Well, I think because everybody's thinking about the bigger picture, the possible overall result, and that's why we feel like there's not enough buzz. But there are very, very keen contests that are going on, and for different reasons, they are very important to observe. For example, Tamil Nadu itself is so critical at this point of time to observe and understand, because if you are looking at Tamil Nadu from a perspective that, okay, is India Alliance under the leadership of DMK in Tamil Nadu is winning or not, and if NDA can even open an account, I think obviously you will not feel like any buzz, because there is hardly anything worth buzzing from that perspective. But if I tell you that the contest is not between DMK and the NDA, contest is not between the India Alliance and the NDA, contest is between BJP and the AIA DMK. That's where the real contest is, because BJP wishes to dislodge AIA DMK as the principal opposition over there, as the party, the option, the default option to DMK as a party, as the challenger. And then all of a sudden, the perspective changes on how to exactly look into Tamil Nadu elections. So a lot will depend on how under Annamalai, Mr. Annamalai, the BJP works, BJP processes, if they cross 20% votes or not, and if they cross, can they get more seats or more votes than AIA DMK? And if that happens, what is going to be the politics of Tamil Nadu in the years to come? So similarly, each and every region, each and every state has its own context, own issues, own priorities to watch out for. But yes, I understand your point that when you look into the overarching scenario and you feel like that, okay, is it like getting too predictive of sorts, whatever we are looking at? Maybe there is a lot of polling and you are listening to a lot of trends, a lot of insights already in the market. I mean, we are running a daily tracker, or Sanjay Bhai doing a quarterly one, or, in that way. So sometimes when you hear a lot about a certain things, you also feel like that we have already heard too much. And that is why there is no buzz. But no, it's not like that. For all of us, I'm sure Amitabh and Sanjay Bhai would agree that even the most mundane contests, which you feel like it's already pre-decided, there are so much to watch out for the politics of future. that we are extremely, extremely interested in each and every seat right now.
No, absolutely. I mean, and also to be fair, a lot of people I'm speaking to are looking at it from the stock market perspective, and what they're saying is, okay, if there is policy continuity, then that's all priced in, we don't have to worry about it too much. So, all right, that sort of context coming in. But here we're talking about hardcore politics and those numbers today, which is quite exciting. Now, Sanjay Kumar, we had the opportunity to speak a couple of days ago on the numbers. And, as we had discussed, one point from your latest survey, which really caught my eye and interesting to talk about in the context of phase one, is that your survey says the BJP will possibly increase its vote share in the southern part of the country. How crucial does the battle for Tamil Nadu then become?
Crucial, yes. Every battle in every state is crucial. Tamil Nadu is also going to be crucial. The change in the nature of contest in Tamil Nadu in 2024, as I see based on the pre-poll survey finding, is that it is heading for a three-way contest now. We have known Tamil Nadu to be a bipolar contest. On one side, DMK-led alliance, and on the other side, AIDMK-led alliance. I think this is an election we are witnessing a three-way contest, because besides the two alliances, there is another alliance which has emerged strong, a BJP-led alliance along with the two regional parties. I'm not sure whether it is so strong to pull surprises in Tamil Nadu, but yes, the nature of contest seems to be changed in Tamil Nadu from a bipolarity to a multipolar or a three-way contest in Tamil Nadu.
I want to come to you on what the big issues seem to be as we embark on this very long, hot, and I'm sure, exciting poll season. What is the big issue that India is worried about right now? We've seen manifestos of the BJP and the Congress. We know the issues that are dominating social media, etc. But for the voter, in your view, what is it that matters and why are they going to cast their vote?
Question is to?
Amitabh.
Yeah. Of course, the issues are pretty much same as they are in any election. The bread and butter issues are there, which is largely unemployment, price rise, poverty. Then you have the corruption also becoming an issue this time because of the electoral bonds data coming out in the open. It also depends upon which side of the fence you're sitting. So like the NDA is raising issues of their track record of governance, the 10 years, what they've delivered and what they've achieved. They're talking about also in various states, let's say for Tamil Nadu, specifically the BJP is raising the issue of dynasty and corruption because it is trying to create a space for itself. Whereas the opposition is largely targeting BJP for unemployment, price rise, etc., as well as freedom of expression, democracy in danger, etc., are the buzzwords which we see. However, we have seen that there is a lot of focus on issues in elections and a lot of debates focus on issues, but issues is unfortunately not the only motivating factor for a voter when he or she goes to the polling booth. So if you see the 2019 Access My India survey, for 37% of people, the prime ministerial face was the main voting consideration. For 25%, the local candidate. For 22%, the party symbol. Only 3% manifesto promises and 13% others, which means the issues get clubbed somewhere in others.
Just talking about the prime ministerial face, and this is, I'm just going to start with Sanjay because this is something that you said. You said that this is no longer presidential style elections we're having. Your quote, if I recall, was this is a referendum on Prime Minister Modi, this election. Sanjay, you want to elaborate on that? Is that what this election is about? It's all about whether you want to vote for continuity with Modi as Prime Minister or not.
From my point of view and from the data point of view, the data which we have collected through the pre-poll survey, I get a sense because there are two narratives. Some people believe that it is a presidential form of election where there is a contest between Modi and Rahul Gandhi. But I differ from this narrative, and my own sense is that it is not a presidential form of election. 2024 election is heading to be a kind of a referendum on Prime Minister Narendra Modi's work. If you are in favor of, if you want Narendra Modi to continue as the Prime Minister, irrespective of whether you have anxieties about price rise, unemployment or not, all those voters are going to sideline those anxieties and they will just go en bloc and vote for Prime Minister Narendra Modi, which is to say they will vote for the BJP candidate. And all those voters who are opposed to Modi, they will not even look at one good work done by Prime Minister Modi's government. They will all vote against against Narendra Modi. So Narendra Modi is at the center of this election. Look at all the campaign material of BJP. Everything is in the name of Narendra Modi. Modi ki sarkar dobara chun ke aani. Everything is in the name of Narendra Modi. And look at the tone and tenor of campaign of the opposition party. I think the tone and tenor is directed more towards Modi ko hatana hai. It's not BJP ko hatana hai. Modi ko harana hai. Modi ek dictator hai. These are they are also attacking Prime Minister Modi. So the Prime Minister Modi is in the center, and that is why I think it is a referendum, kind of a referendum on Prime Minister Narendra Modi.
Yashwant, you agree with that theory? That this time around, especially when you're looking at a possible third term, the BJP's own claim is that they will get unprecedented numbers. It becomes more about the entity than anything else?
Well, what Sanjay Bhai is saying is pretty much evident from the number, even the trackers that we are running. And it's like not just the BJP wanted to make this the way it is coming up, but it is also the opposition who has played into that game. If you look into the largely for the 4.5 years campaign of the opposition in this country, you'll realize that they have made it all around the Prime Minister's own image, the Prime Minister's own thing. Even though they knew it very well, even in 2019, it kind of backfired, but somehow they continued. It is only in the last few weeks, if I may say so, that some of the contests, they've started making it more localized in a way. But going beyond that, it has been all about Modi. And there is an overarching narrative for or against the personal popularity of Mr. Modi. And that is what is defining, that has been defining the politics of this country at the central level about the leadership, about the working of the leadership. So much so, Tamana, that it's no more just about the Lok Sabha elections. If you look into the assembly election, majority of the states have been, like, assembly elections in West Bengal have been about Mamata Banerjee. In Delhi, it has been about Arvind Kejriwal. In Tamil Nadu, it has been about Mr. Stalin, so on and so forth. So yeah, I mean, that equationing is happening, and that is not just at the central level, but also at the state level. But right now, it's the vacuum of Modi versus whom, where it is helping Mr. Modi and BJP a lot. So far, we don't see any alternative leadership getting numbers at the national level that can be said that, okay, these are the serious numbers which should be considered as a challenge to the BJP or Mr. Modi. All along in the last 5 years, my number or Mr. Sanjay Bhai's number, you will realize that barring the brief few months period, couple of months after the second wave of COVID, every time we have checked, and we do a daily tracker, Pramana, that Mr. Modi's popularity ratings have been north of 50. Many a times north of 60s. Only once they went around in the 40s, that was post second wave of COVID. And then even at the lowest bottom ebb of that for Mr. Modi, unfortunately for the Congress, Mr. Rahul Gandhi's personal rating was still hopping in the 20s. So his worst was also having a ratio of 1:2 when compared to Mr. Rahul Gandhi's ratings. Right now, the rating, that number is 1:3. And that has been not just a recent phenomena, that has been all along for last 5 years. And there has been no dip in the personal rating of the Prime Minister. And I think that is why it remains the driving theme of this entire election season.
So it is about personality, it is about Prime Minister, it is about, for voters, more than individual issues, etc., and more than their own candidate or MP, it becomes about whether you want to vote for continuity of Modi or not. Amitabh, considering how expectations are, polls are showing that you will have maybe a continuity, what are the possible challenges? We know what's going for the NDA and the BJP. That's all very well known. The question is that could there be any surprises at all? Do you see anything on the horizon like that?
I think the possible challenges for the BJP, of course, is over-dependence on Narendra Modi. Because if you remove the Modi factor from the entire equation, then the contest becomes fairly tight. I mean, in 2019, almost 80% of NDA's lead over UPA was on account of the Modi factor, and this is perhaps likely to increase in 2024. So over-dependence on Modi is a factor. I mean, every strength is a weakness, I believe. So if Modi is the strength, he is also the weakness. If the cadre becomes lazy, if they do not come out on the voting day and get out the vote of the people who are loyal voters of the party, or even if the voters become a bit complacent that anyways the Prime Minister Narendra Modi is going to come back, then it is going to pose challenges. That's number one. Number two is that whatever said and done, the opinion polls last date has already crossed. But now there will be no polls from now to June 4th or rather June 1st. So what happens is that the sentiment of the public moves along with news items during these 40-45 days, which opinion polls may not be able to capture and which will be captured largely in the exit polls. So what could also happen is that because of this electoral bond issue and the washing machine issue and Kejriwal's arrest, etc., and that is evident also in Sanjay Sir's survey, is that the lack of people's trust in ECI has reduced, and the number of people who believe that the central agencies are being misused is also fairly high. So what it has done is that it has somewhat created some sort of, you can say, discontent or the talking point among the neutral voters of the BJP, and BJP cannot win any election on the basis of its hardcore Hindutva vote. So this neutral voter, which is roughly 1/3 of the BJP's vote share, has, or rather a section of this neutral voter has started asking these questions, and we have to see how this pans out, whether they remain enthused to vote for BJP, they sit back, do not come out, or they cross over to some other party. That will also could be a key factor going forward.
This is interesting. I was reading a report today that said that about 30% of voters make up their mind on who to vote for in the last couple of days. I don't know if that's the right data. Yashwat, I'd like to know your view, because unlike, say, an American election where a majority of the voters have already decided what side, and you have a very small portion of swing votes, that's not the case in India, right? That's why no election can be pre-decided in advance where you can just sit back and expect the same result.
No, it's not like that. A significant number, Tamanna, actually decides pretty close to the election in the last few weeks, and sometimes a significant number even on the they say that we decide on the day of the voting. But that doesn't mean that that the turnout factor get decided by that. But turnout factor decided by the factor that, how enthusiastic people are for the process of voting. Sometimes, as Amitabh mentioned, that complacency factor creeps in, and that is where 2004 kind of black swan happens in that way, because nobody expected that. But in the urban areas of India, the 2004 election were also unique in a way that the urban turnout dropped by 18%. That's a huge drop. And for the first time, BJP in 2004, even though they won the majority of the rural seats, they lost huge majority of the urban seats, which were otherwise considered to be BJP's pocket borrow. So I guess that the turnout factor is extremely, extremely significant. And it's not just because of the political reasons, Tamanna, it's also because of the heat wave. If you look into it, the way the elections have been stretched out right up to the first week of June.
Right.
And the other day, the Hindustan Times did a remarkable piece on figuring out what would be the temperature on each and every Lok Sabha seat on the polling day.
Wow.
And overwhelming majority were looking at a 40-degree plus temperature during the polling day.
Yeah.
And that caught my eye, and all of a sudden I recalled 2004 elections when the heat wave did play a significant role of the urban turnout, including a very, very weird kind of phenomena of holiday looming large. That if there many places where the polling day is either Friday or Monday, a long weekend seeps in, and people start going out for a long weekend vacation instead of voting.
Yeah.
And these are the things which are clear and present danger for the BJP, I would say, because of the 2004, not because of the anger or India shining, failed or anything
just
else.
complacency. But having said that, people should vote. People should vote no matter who you want to vote for. I'm not extending this to who this is bad or good for. Not at all. You have to go out and vote. If it's a long weekend, still go out and vote. And if it's a heat wave, maybe go after it gets a little cooler, early morning or later in the evening.
And it can work the other way around as well, Barkha. Tamanna, you are right that it can work against if the turnout drops in, it can work against the opposition as well. Because we have also so many examples of elections, Sanjay Bhai can count you, that a low turnout actually helps parties which are cadre-based. That in a burst of turnout.
And the incumbent in several states.
Exactly.
Absolutely.
So good for everybody that turnout is high.
So one resounding message, and we have a campaign on NDTV, the Pledge to Vote campaign. Please go to our website, join it, come in, vote. We have corporate citizens leading it, and specifically corporate citizens, because urban voter apathy is the worst to deal with. This long weekend chutti business has to stop. Go out and vote if your day is there. Remember, your employer has to give you a leave as per the law. On that note, thank you so much to all of you for joining us today on this special show as we try and set the stage for phase 1 tomorrow. That's all the time we have. We'll take a very short break, but stay tuned. So much more on the other side on NDTV Profit.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit. Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Market extends its losing streak after erasing intraday gains as volatility in global markets and geopolitical tensions weighed on the indices. Infosys ends in green ahead of its fourth quarter earnings this evening. Analysts expect revenue to drop while net profit may rise by 1%. Deal wins pipeline among key factors to be watched out for. Nestle responds to Swiss investigators' claims, says that added sugar has already been reduced by 30% over the last 5 years. Stock ends around 3% lower. Vodafone Idea's FPO subscribed 18% as of 3:50 p.m. QIB portion subscribed 44%. Voting for Lok Sabha elections begins tomorrow. Voters in 102 constituencies across 21 states will cast their votes. Hello and welcome. You're watching The Reporter on NDTV Profit and I'm your host Pragati Oberoi. As always, the show aims to bring you the market headlines along with national and international news. But before we start the show, let's take a quick look at how the markets fared during the day. Well, as we all know that the benchmarks erased intraday gains to extend the losing streak to the fourth time in the day. The Nifty 50 chart is also up on your screen to show how it performed during the day. Apollo Hospital, Nestle and Axis Bank dragged the markets lower. In fact, Nifty ended around the 22,000 mark and Sensex closed near 72,490 points. Nestle was another stock that we had our eyes on. Indeed, it ended about 3% lower towards the closing in response to what the Swiss allegations have come. The broader markets marginally did better than the benchmarks. However, all sectors barring media ended in the red, with healthcare and FMCG as the top losers. The market breadth was largely in favor of the declines, as you can see with the chart up on the screen as well, with advanced decline ratio at 14:36. Well, staying on with the earnings since the season has already started, HDFC Life's fourth quarter profit jumped by 15% to 412 crore rupees, and this was compared to last year. Net premium rose by 5.5% to over 20,500 crore rupees, while the value of new businesses declined 5% to 801 crore rupees. That's the HDFC Life review up on your screen. Now let's also take a look at the top story of the day. Nestle ended around 3% lower, and we already showed you the chart of that previously as well, after revelations regarding the sugar content of Cerelac have sparked a surprise. Sessa Shen joins in to get this special report.
If you are a parent and have a kid at home, you will be shocked to know what I'm going to tell you now. A new study by Swiss investigative organization Public Eye has revealed that Nestle, which is the world's largest food company, uses excess sugar in its baby food products in India and other developing nations. Nestle uses 3 grams of sugar in every serving of Cerelac sold in the country. I'll ask my camera person to show you the label of Cerelac. So if you look at the label, Nestle says that it uses 9.1 grams of added sugar per 100 grams of Cerelac. This essentially means that the company uses 10% of its sugar in about 25 to 30 grams of Cerelac. Now, what is even more shocking is that in developed markets like Europe, there is no such added sugar that is used in their products. This raises 2 serious questions. One, is Nestle putting children's health at risk in a country where several studies have indicated an alarming rise in obesity among children? And the second, are there any guidelines or a law that checks promotion of such products in the country?
That was Sesha bringing the special report on Nestle's Cerelac. In fact, she also had a chance to speak to Arun Gupta, who's a senior pediatrician and convener of the nutrition advocacy in public interest. On that, she spoke about what the ideal content of sugar should be in Cerelac.
Nestle is putting in infant health at risk because these products are not only by the way of sugar, but they are unhealthy, as Nestle admitted itself few years back. Secondly, they are inherently also not sterile because containing powdered milk in them. That's why WHO also recommends that there should be no added sugar and salt in the food below 2 years of age. Indian Academy of Pediatrics in India also says so. Similarly, National Institute of Nutrition in India also recommends that sugar should be avoided. So the reason that this report is coming forward to tell us that there is a sugar which is around 10% in the product, and that's quite unhealthy, I would say.
All right, so how alarming is this? I mean, in terms of provisions and guidelines, do we have anything as such? How much sugar should be actually used in baby products?
The first question about alarming. Yes, it is alarming. The more you increase the intake of sugar in very young babies, it actually pushes them to consume more. So they consume more of such products, and it pushes them towards obesity and later on towards other non-communicable diseases such as diabetes. So this is very important, a point of prevention. That's why WHO recommends that. Now coming to how much sugar it should be there in this product. The Foods for Infant Nutrition regulation by the Food Safety Authority guides about the amount of carbohydrates. The carbohydrates is recommended somewhere around 55%, but in this product you will see that the carbohydrates are 68% and 23% is the total sugar, and added sugar is 9.1%, which is quite high in any standard of health, so that people don't know about it, number one. Number two, the more they consume, parents feel happy about it and they tend to consume more. That adds to the sales volumes of the company.
Well, that was an expert take on the burning issue, and Nestle will be in our focus throughout the day as well. Moving on, Vodafone Idea's 18,000 crore rupee FPO that was launched this morning was subscribed at 18% as of 3:50 p.m. The QIB portion was subscribed at 44%, and that's exactly what we mentioned in the headlines also for you. In fact, our team spoke to CEO Akshay Mundra and asked him about the timeline and the quantum of tariff hikes that the company plans to implement soon.
I think there's a strong need for tariffs to get to levels where ARPUs are sustainable and provide ability to the industry to make further investments. I would expect it to be faster than a very slow pace.
Can I put in a figure here? Because what I've been given to understand that you may need at between 20 to 25% of increase in tariffs post-elections up to FY26. Is that a right figure to go by to get the return on capital?
No, I think return on capital, you have to see that what is the current level of ARPUs, what is the ARPU required to get to a cost of capital. I believe that gap is much more than 20% today. So a 20% tariff correction will not take you there. How much would be the tariff correction? I cannot comment. But as I mentioned that in the past, tariff corrections of about 20% have been well absorbed in the market.
Well, that was Vodafone Idea's management, and with the stock in focus, Bharti Airtel also saw some strong moves. In fact, we spoke to Gurmeet Chadda of Complete Circle earlier in the day, where he had some very interesting things to talk about the stock, as it saw a jump of over 5% in the trade.
I think Bharti has been on a roll for the last almost 2 years now. I think I remember getting stuck in a range for a while. And I made this discussion when we used to interact that you can't have Jio at more than 100 billion valuation. Now, obviously, Jio platform is around close to $150 billion valuation, and Bharti being 50 billion. Today, I think crossed ICICI Bank's market cap, if I'm not wrong. And great additions on 4G and 5G. I think on a quarter-on-quarter basis, they've been adding 6 to 7 million on 4G, 5G. Industry-leading ARPU. The digital portfolio seems to be doing well. The home broadband business doing well. And some stability even in the Africa business. I always believed that Bharti was slow on payment banks and digital. It would have done much better with the guy. It was the first to get that license. I think I see more value unlocking there. Bit of a rub-off from the Bharti Hexacom, its subsidiary IPO as well, which got a very good response. My sense is this, it will eventually become a 2.5 pair. It's already a 2.5 pair. Vodafone Idea, probably in my view, I'm a little concerned on equity dilution. If government converts the dues to equity, it will almost be 80% kind of holding for government, and 18,000 crore isn't much. It will be used to first enhance 4G sites and then get to 5G sites. So there's already a gap. And post-merger, Neeraj, if I'm not wrong, they've lost 19-20% market share. They had almost more than 42, 43 crore subscribers, if I'm not wrong. It's down to about 22. So I don't know. I'm not too sure. In fact, last 2-3 years, a lot of people have wasted their time on analyzing too much on Voda, Yes Bank, Z, etc., and probably have missed the entire bull market.
Well, moving on to some political news, wealth redistribution will take India back to Garibi Hatao days. And that's what has been said by former Chief Economic Advisor K.V. Subramanian. And he said it while speaking to NDTV's Gauri Dwivedi. In fact, he added that Karnataka's freebies model is in fact not a success story.
Emphasize far more on growth and the enlargement of the pie. I think that is very important. If we look at the way in which welfare programs have been made far more efficient, look at the benefits we've had from direct benefit transfers, those are definitely commendable, and we should actually definitely continue and redouble. But this kind of explicit, redistribution, I don't think those are economically very, very good. If you look at, and I think let's take the example of what has happened, in the south, in Karnataka, those 5 freebies that were promised, actually, a state that was in very good fiscal situation just within, less than 2 years is actually now, it seems to be in a fiscal problem. And I think that is that provides very good evidence for what, these kind of ideas will, to me, if I may actually, I think these suggest that there isn't adequate creativity, in the economic ideas that are coming from some of the quarters. Just to give you again a map, the private consumption expenditure, the consumption survey that came in using the $1.9, purchasing power parity threshold. Clearly the poverty has significantly declined from 12% in 2012 to 2% in 2022, and yet we are actually and this is the benefit not of this kind of wealth redistribution, but really focusing on enhancing the efficiency of the welfare programs and growth. And so the evidence is very clear that which direction we should be going.
So you mentioned Karnataka. Would you say that Karnataka should be seen as a cautionary tale for any of such promises to be made? Would you say that?
Yes, indeed.
So, and you would say that for wealth redistribution as well, because that's another area where a lot of promises are being made.
Absolutely. I think let me point out this example, right? Because in the 1980s, we had a government which had the marginal tax rate at 97%. Obviously that was a significant effort at wealth redistribution using slogans like Garibi Hatao, etc. We know very well what that led to. Even for instance, as of 2012, poverty was 12%. So neither the redistribution nor those slogans like Garibi Hatao actually really had the impact. In contrast, good growth and focusing on enhancing efficiency of the welfare programs has had its impact. Poverty has reduced drastically from 12% to 2%. Even if we use a higher threshold of $3.2 in 2011 purchasing power parity per capita per day, poverty has reduced significantly from more than 50% to less than 30%. So I think as an economist, I see the data, and I think some of these ideas actually have been tried and have not been successful. I'm sort of surprised why the same sort of old wine actually, which is sort of has not worked very well, is being peddled again.
Well, it's time for a quick break, but please stay tuned because we have lots more lined up for you.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you
Welcome back. You're watching The Reporter on NDTV Profit. Now let's take a look at the big story, voting for Lok Sabha elections. The voting begins tomorrow and voters in 102 constituencies across 21 states will cast their votes. Elections will be held in 7 phases this time. Let's get you some expert voices ahead of the first phases of these elections.
Of course, the issues are pretty much same as they are in any election. The bread and butter issues are there, which is largely unemployment, price rise, poverty. Then you have the corruption also becoming an issue this time because of the electoral bonds data coming out in the open. It also depends upon which side of the fence you're sitting. So like the NDA is raising issues of their track record of governance, the 10 years, what they have delivered and what they have achieved. They're talking about also in various states, let's say for Tamil Nadu, specifically the BJP is raising the issue of dynasty and corruption because it is trying to create a space for itself. Whereas the opposition is largely targeting BJP for unemployment, price rise, etc.
There are very, very keen contests that are going on, and for different reasons, they are very important to observe. For example, Tamil Nadu itself is so critical at this point of time to observe and understand, because if you are looking at Tamil Nadu from a perspective that, okay, is India Alliance under the leadership of DMK in Tamil Nadu is winning or not, and if NDA can even open an account, I think obviously you will not feel like any buzz because there is hardly anything worth buzzing from that perspective. But if I tell you that the contest is not between DMK and the NDA, contest is not between the India Alliance and the NDA, contest is between BJP and the AIA DMK. That's where the real contest is.
Well, that was an update ahead of the voting that begins tomorrow. Moving our focus to a special series now, How Rich is Your Candidate? This time we are putting the spotlight on Tejasvi Surya, who's contesting from Bangalore's southern part. Alex Matthew joins in to break it down for us.
This young candidate has a bet on equity in a big way, and you'll see why. Let's first look at the total gross total value of his assets. It currently stands at about 4.1 crore rupees, and it's roughly gone up as much as 4 times over the last 5 years, and quite a bit of that has to do with his equity investments. He's got fixed deposits of about 5.45 lakh rupees. That's actually reduced from 8.76 lakh rupees in 2019. He's got movable assets of over 4 crore. His taxable income in FY23 stood at as much as 44.13 lakh, and that's also a very substantial jump from 5 years before that, when it stood at about 5.13 lakh rupees. He had no mutual fund investments back in 2019, but then as of now, he's got as many as 26 mutual fund schemes, and that's perhaps a little too many. Having said that, he's got close to 2 crore invested currently in these schemes, and the biggest holdings are in small cap funds. So you'll see the likes of Kotak small cap, as well as ICICI Prudential small cap and the Tata small cap fund in the list of mutual fund schemes that he has. He's got cash of 80,000. That's more or less stayed constant over the last 5 years. Doesn't believe perhaps in holding too much cash. And he's got investments in listed stocks, which again, he did not have in 2019. And some of them include the likes of Dredging Corp, as well as BSE, which has done incredibly well, Everready, Indus Towers, Jagsanpal Pharma, as well as Network 18, Strides Pharma, and Tejas Network.
Well, that was a chunk of a special series for you, and that's all that we have for you on The Reporter for the day. But please stay tuned to NDTV Profit for all the latest news and updates.
We are joining NDTV's Pledge to Vote initiative, I pledge to vote and also encourage all of my colleagues to exercise their voting rights. Election is the largest celebration of democracy and we fully support it.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Good morning and thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Smriti Chaudhary. We will take you through the next half an hour of trade. And this show is geared towards getting all of your answers to stock-related questions that you might have. And you can send those questions to us on any one of our social media platforms or in fact on the WhatsApp number that is on your screen right now. Let's take a very quick check of how the markets are looking right now, and it's a pretty picture. And in the context of cuts across the board in the Asia Pacific region and not the best handover from the US markets overnight, you have the benchmark Nifty 50 that's trading very close to the high point of the day right now, up about 0.5% or thereabouts and moving, edging closer towards that 22,300 mark. The broader markets in fact looking even more sanguine, if anything, and you have the mid-cap index that's up about 0.8% or thereabouts, and you have the small cap 250 index that's up over 1% right now. So understandably, the market breadth tilted in favor of the advances. In terms of the key contributors on the Nifty 50, let's take a look at that list. You have Bharti Airtel at the top, followed by Larsen & Toubro and Tata Consultancy Services. Infosys up and about before the presentation of its Q4 results. On the other end of the spectrum, you have the biggest loser in the form of Nestle India, and some reports emerging over the course of the last couple of days that the company is in fact using added sugar in its Cerelac, which is widely consumed, and this is something that is only in developed nations, in a few developed nations, India included. In Europe and in the UK, there is no added sugar. There is some pressure on the stock on account of that. We will talk about that in just a bit. But for now, let's turn to ICICI Lombard, Smriti.
Right. Good morning, Alex.
Morning.
ICICI Lombard is the focus for today. The stock is up about 3.5%. And to break down numbers for us, we have my colleague Puneet joining in. Puneet, tell us about the performance of ICICI Lombard.
Yeah, thanks, Smriti. So the company had issued a steady gross domestic premium income growth in this quarter compared to last year, while the combined ratio have also seen a reduction for the better. Now for the quarter 4, the GDPI income grew at 22%, coming at roughly 6,070 crores versus 4,900 crores in this time last year, while the combined ratio has improved to roughly 102% from 104% previously. The solvency ratio has also done well, coming in at just 2.6 times versus roughly 2.5 times previously, while the PAT has grown at roughly 17% compared to previous year, coming in at 520 crores. Now, when we go to the product mix, we've seen a stable for each of the products. Like motor, they are at 19% versus 20% previously. Two key data points here within the products. They said that within motors, the third-party rate hike has not been announced for 2025, which augurs well for the demand for the particular product. While in the health and travel vertical, they said that the retail health agency grew roughly 22% compared to previous year, where it competes with the likes of Star Health in this segment. We've seen roughly fire as well as the other segments maintaining market share roughly, as well as the product revenue coming in at stable 14 to 15%, which is the still. Now finally, what are the brokerages saying? HSBC has maintained their target price of roughly 1,990 rupees, which is a 20% upside from the current levels. They say that the firm has increased its market share gains and is focused in each of these segments going forward as well, lowering the loss ratio given forward. They say that they see that meeting FY25 operating ratio guidance should lead to even higher EPS growth from the current levels, while it says that the firm is firmly placed to deliver a faster premium growth compared with the industry. So ICICI Lombard doing very well on the results, and the stock is up roughly 3.5% today. Back to you.
Right. Thank you so much, Puneet, for that. And on that note, let me introduce you to the guests for today. We have Lancelot Dikuna, CIO, ValueX Wealth Connect, and Swati Hodkar, Senior Equity Technical Analyst Research at Nirmal Bang Securities. Welcome to both of you, and thanks for taking the time out. I'll come to you, Mr. Dikuna, first on the focus, which is ICICI Lombard. We're seeing results are pretty much in line with what was expected. You're seeing brokerages giving a target price of an upside of 18 to 20%. Are you also seeing that sort of gains in the longer term?
Yes, I am looking at seeing that kind of improvement in the financial performance drive the pricing up as well. Because if you look at from a macro situation, as the economy continues to grow, general insurance will also grow at 15 to 18% per annum. And since ICICI Lombard has been consistently maintaining its market share in most of the important segments like fire, motor, etc., which are the profitable segments, we will continue to see growth coming into this sector, and as well as growth for ICICI Lombard. Even the management has indicated that there could be a 15 to 17% growth in the premiums. And with the loss ratios looking better, I think this stock should do much better over the longer term.
Okay, fair enough. We had initially thought of taking Nestle, but then when we discussed it, the stock was not reacting too much. And then after that, of course, let's pull up the chart and see where it's currently trading. It's down as much as 3.5 to 3.7% off the low point of the day. Lancelot, I do want to broach the topic with you, because reports emerging that there is as much as 9% of added sugar in Cerelac in India and certain other markets. Now, it's hard to quantify the impact of this, but I can't see parents very comfortable with the idea of sugar in the food that they're giving their children. We were trying to look at the revenue contribution, and it's not very clear the breakup between baby food in the context of the overall milk product space. But do you think that there could be a sizable impact, and how would you react to this if you are an investor?
So if you actually analyze the business of Nestle, a large part of the business comes from the Maggi noodles and the ketchup part of their business. A significant portion of revenue also comes in from their milk product space, and Cerelac has been one of their mainstay products as far as the baby food is concerned. Now, while this news report, or the reports suggest that these are some inadequacies, we also need to understand that this stock always has been priced at a huge premium over other FMCG stocks. And we could see that with this kind of news, the premium can get shaved off a bit. as far as, unless we start to see some regulatory action coming in, saying that, okay, Nestle is now not allowed to sell this, or some action is being taken by, regulators in the space, that could have a much higher significant, let's say, a negative impact. As long as that doesn't happen, I think on a sales basis, you may not see too much of an impact, because, in reality, people who are, this kind of news really doesn't impact sales directly, because a lot of people believe that, okay, the product of the company is good, and they would go by the brand, that it's a global brand, they will give us good products, etc. But any regulatory action in terms of asking them to stop production or sales in this could mean a significant downfall from these levels as well.
All right. So regulatory action is what we're going to watch out for in this specific counter, because that's the key factor that may avoid the stock here. But let's start with the queries now. The first one is from Himanta, and this one is on ICICI Prudential. They say they bought the shares at a price of 619 rupees. So I think this is a short-term question, so I'm going to come to you on this one. It's slightly higher than what the current price is. What do you have a target for the shorter term in this particular counter?
Yes, as of now, the view is definitely a positive. Stock is trading in the pattern of the high top, high bottom formation. Also, the interesting fact as of now, it is well placed above the short term moving average, that is 20-day moving average, which is also a positive indication. But we
Okay, we unfortunately, just while Swati was giving out her advice on that particular stock, I've lost her feed. We'll get her back shortly. In the meanwhile, let me take the next question. We'll revisit ICICI Pru, but the next question is from Mohit, and he's writing in from Ludhiana. He's asking about IDFC First Bank, which he has bought at levels of 26.94, and those are attractive levels if you actually think about it, because the stock is currently trading above the 80 rupee mark. Okay, so I'm told we have Swati back. Swati, you were talking about ICICI Pru. What's the advice here?
Yes, Alex, the overall view on this particular counter is really positive, because I was explaining on the technical front that the stock is trading in the pattern of the high top, high bottom formation. Also, the interesting fact that it is well placed about the short term moving average, say the 20 DMA. And as we have seen a very good amount of a rally from almost 500 to 640 levels within a very short span of time, say within a span for 2 months. So, profit booking cannot be denied at the higher levels. I will suggest to hold on the counter as long as it's maintains 600 support levels. Once it manages to give the breakdown of 600 levels, then only we can witness some sort of a profit booking. So those who are having any long positions, they can hold on upside and looking for immediate target of 640, then 660 levels on the high side. But keep your long positions by maintaining a stop loss of 600 levels.
Okay. We've got a couple of questions, and I had already taken the first one, but I will repeat it. Mohit from Ludhiana is asking about IDFC First, which he's bought at levels of 26.94, attractive levels. His horizon is about 2 years. And we've got Sri Kishore Sharma from Motihari in Bihar, who's bought at levels of 61.62, and his time frame is as much as 3 years. He's wondering, both of these individuals wondering what the prospects are. Lancelot, what do you make of it? It's currently trading above the 80 mark. What's the potential for upside from here?
So I think the potential remains strong, Alex, because this bank has been focusing on the retail liability side as well as retail asset side, and its strength has been in that space. And we've seen them expand a lot in the retail liability side by opening more branches, collecting deposits. So they've seen a fairly good deposit growth. NPS have been fairly low. So given that this space is continuously growing, you are going to see significant growth opportunities for the bank, and that should result in much higher valuation. So I would say that if one is willing to hold on to this stock for the next 2 years to 2 to 3 years, you would get above average returns on this counter.
All right. Next counter we're talking about is Piramal Enterprises. Now this question is coming in from Rajesh. They say they want to know the fundamental view on this particular stock. And Mr. Dikuna, we saw the stock getting affected by the AIF rules that came out a couple of months ago, but we've seen recovery from that. But fundamentally, how do you see the stock in the longer term?
So I think over a longer period of time, yes, the stock should give investors good returns. But they've made a large amount of investment in in the pharma space and in spaces which will be impacted with these AIF rules. If at the moment, I believe RBI is also looking at this the rules in a little bit more sympathetic manner. But probably over a period of time, these rules will get tightened and they will have some impact. So from a long-term perspective, yes, there could be growth opportunities, but there are also various other opportunities in the space which could give you fairly good returns, and one can look at those as well, where you're seeing more clarity on the upside.
Fair point. Orient Cement is the next counter that we're focusing in on, and Namita has got this question. She's specifically looking for a 3 to 6 month view and a technical view at that. Swati, what's the view on the charts?
My view on this particular counter is little bit cautious, Alex, because I am saying that from the month of the January itself, we are witnessing a good selling pressure from almost 290 to now the stock is trading at almost 200 levels. And more downside can be seen into this particular counter because we are witnessing a very strong resistance at 220 to 25 levels. As long as it doesn't give the breakout of the same levels, we are not likely to witness a positive momentum on the higher side. So I will suggest to book the profits or to exit the long positions whenever we get a rise towards to 220 to 225 levels. As of now, 198, 197 is acting as a crucial support level. If it breaks that previous swings low, more selling pressure is likely to be intensified and which might take a stock back towards to 180 levels. So my view is a bit cautious. Try to exit the positions on every rise.
Alright, so the next question is on the counter Yes Bank. This is from Anil. They say this is a good time to invest in the stock. Now the stock hasn't been doing too much in the last couple of days, but has given about 46% returns in the last 1 year. Do you see some kind of an upside in the shorter term on this counter?
This counter has not performed really very well on the technical front from almost from last 4 years. The stock was trading within this range of 15 to 20 levels. Now it has came out of that particular range, but we are not witnessing a very much price momentum in this particular counter. So those who have the extra capital and longer time horizon in hand, then only one can invest in this particular stocks. Because I believe this counter is likely to witness a very slow rally on the higher side. Upside, as of now, the stock may rise towards 30 to 34 levels, whereas on downside, it has a strong support levels at around 20. So those who are interested for a slow momentum counters, one can invest. But my personal opinion to stay away from the Yes Bank rather than in this particular counter, one can go for into the SBI, Federal Bank or the Bank of Baroda. These are the good banking stocks one can invest.
All right. Yeah, I mean, incidentally, his time horizon is as many as 2 years. But in any case, I think that view holds true. We have to slip into a very quick break. We've got more questions that we will take, so do stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome to Infosys Earnings Edge. The company has just come out with its earnings. There is a guidance that's coming in with respect to FY25, which is 20 to 22% EBIT margins there. I have with me Rucha, who's the research analyst tracking IT. Rucha, what are the basic numbers that you're getting as of now?
Yeah, so Infosys has just come out with the result. The guidance for FY25 implies a revenue growth of 1% to 3% in constant currency versus what was expected, somewhat higher, around 4 to 6%, while operating margin guidance is in line with the estimates at 20% to 22%. The revenue constant currency for the current quarter is from negative 2.2% in CC terms. This is far much lower than what was expected. The expectation was negative 0.6%, while the reported is minus 2.2%. Sajid sir.
So it's basically a degrowth in revenue on a quarter-to-quarter basis,
yes,
up to the tune of nearly 2%, which we are seeing there.
Yes.
And that's much worse than the street estimate, which is there. What about the margins? Are the margins and the bottom line pretty much in line with street, or is it only the top line disappointment which is coming in?
So the margin is also a disappointment for the street. The reported margin is 20.1% for the fourth quarter, while the estimated was 20.7%.
So it's basically, again, in TCS we saw the EBIT margins going up.
Yes.
But here we are seeing the top line missing the target. You have the EBIT margins missing the target, and hopefully the bottom line is also missing the target. Do we have the analyst, Gaurang Shah? Yeah. So what could be the reasons for this?
So maybe I think the uncertain environment, right? The clients are not sure about where the demand will go. There are cost optimization deals, there are larger deals. Smaller deals are very less in number, and that is why pricing is stuck to a longer duration, I think. And now we have Mr. Gaurang Shah, the head investment strategist of Geojit Financial Services. Hello, Mr. Gaurang.
Hello, good evening to all of you.
Good evening. Hi. So let's have your take on the results. What do you think of this disappointment? I think this is huge for the IT companies, and the guidance is really huge. What are your takes on this?
So I think when you compare TCS and Infosys numbers, then definitely, and in terms of expectation also, there has been a little bit of downtick. And as far as the street expectation was concerned, the street did not expect any kind of runaway numbers. But in terms of disappointment, backdrop of environment and events under which the IT sector was working, one could go in with a lower expectation. Possibly a knee-jerk reaction on the counter could be seen tomorrow morning when we open up for the trade. As a disclosure, we do have a positive coverage on Infosys since we are discussing the stock on the results. This is purely on the fundamental side from a long-term point of view, and management's commentary in terms of the outlook will be of more of a focus. I think press conference or some kind of statement released from the company could possibly guide us to the outlook in terms of future. But we believe that constraints were there in the past, and that's primarily the reason why we are witnessing these numbers.
Gaurang, if I can take you through the numbers, the reported numbers on a quarter-to-quarter basis is negative 2.1%, and in constant currency terms it's negative 2.2%. So both in constant currency and in reported quarter numbers are quarter-on-quarter numbers are below the street expectation, because street was expecting between flat to 0.5 to 0.7 degrowth coming in on a quarter-to-quarter basis. So, what do you attribute this, huge differential in terms of the degrowth which we are seeing on the top line front?
So, spend, budgetary cuts, discretionary cuts, and of course, not able to rope in large ticket clients would be the primary reason in terms of this kind of a number reported. But yeah, I mean, Street was expecting flattish numbers, but this is a little bit below than what the Street estimates were there.
Also, another thing which is there is with respect to the EBIT margins there, because there is a contraction of EBIT margins. Your EBIT margins have fallen from 20.7 to 20.1, and that's also a bit of a disappointment which is coming in.
So, in an environment which is very, not very conducive, margins do come under pressure. And there is also a concern in terms of headcount and attrition rate also, which I don't have the number in case if it has been given out by the company in terms of attrition. Like I said, the environment, the backdrop of events, we did not indicate any kind of positivity in terms of margins improving. In fact, this could possibly lead to spillover in terms of numbers first quarter this financial year. But possibly second half of financial year, you could see some kind of improvement come through, provided they are able to rope in large ticket clients and possibly improve the margins.
Gaurang, marginal decline in attrition from 12.9% that we saw in December to 12.6%. So, there's a marginal fall which is there in terms of attrition which is coming in.
So this is a little bit better. In fact, even when TCS reported a better number as far as the attrition rate is concerned. So, we were all aware that new headcounts were put on hold given the kind of constraints that were there. Possibly if the deal pipeline or large ticket clients start roping in, then we'll have some kind of improvement. But this number and marginal downtick number on the attrition front is good news.
Got that, Gaurang. So basically, I just want to ask on the revenue front. Revenue for FY24 is reported a growth of 1.4% in constant currency terms, while the guidance was at around 1.5 to 2%. So that is again below the range guided by the company. So how will the Street have a take on this?
So Street, of course, like I said in the beginning, you might see a knee-jerk reaction on the counter tomorrow. Possibly, the downward rating could also be seen, but since the numbers are just coming out, very difficult to comment on that. Even my team would need some time to possibly dissect the numbers. And like I mentioned, when Europe, US go through difficult times, when discretionary spend is cut, when budgetary cuts are there, this kind of a number does send in a little bit of concern, at least in the immediate short to medium term.
I just want to get your take on the TCV $4.5 billion in Q4, and also the fact that the guidance for FY25, which they have given 1 to 3% growth in constant currency terms, operating margins 20 to 22%, which is pretty much in line. But the revenue growth targets, which is very disappointing because Street was expecting 4 to 5%, and the TCV at $4.5 billion. How do you look at that as a whole for FY25?
It has been history, very conservative in terms of giving out guidance with respect to large IT companies. And possibly in some cases, if the environment turns positive, then they tend to overshoot that kind of a guidance. So I'm not surprised with the conservative guidance that they have given, and they have been like that even in the past.
So in case of TCV, it again mentions that it is highest ever at $7.7 billion. So I think this was the case with TCS as well, wherein they were recording highest ever TCV, but the same is not getting converted into revenue. So again, that is the case with the sector. So what are your thoughts on it?
Exactly. So that's what I said. But let us understand one thing, that with the current environment that we all live in, avoiding any kind of mishaps in terms of phishing and cyber issues and all that, you will eventually end up spending on improving your IT infrastructure and platform. That's when you will have, even AI is something.
I need to butt in here because the management has started and is giving his first thoughts.
Our operating margin for the full year was 20.7%. For large deals, we had an excellent year and the fourth quarter. For the full year, it was at $17.7 billion in large deals, comprising of 90 deals. For Q4, we had $4.5 billion in large deals. This is the highest ever large deal value in a financial year for us. For Q4, our year-on-year revenue growth was flat in constant currency and declined by 2.2% quarter-on-quarter. Our operating margin for Q4 was at 20.1%. We are seeing excellent traction with our clients for generative AI work. We're working on projects across software engineering, process optimization, customer support, advisory services, and sales and marketing. We are working with market-leading open access and closed large language models. As an example, in software development, we've generated over 3 million lines of code using one of the generative AI large language models in the public domain. In several situations, we've trained the large language models with client-specific data within our projects. We've put generative AI in our services and developed playbooks for each of our offerings. We are committed to ethical and responsible use of artificial intelligence. We became the first IT services company globally to achieve the ISO 42001-2023 certification, testifying to our commitment to excellence in AI management. All of this work in AI is part of our Topaz offering and capability. We are delighted to announce the strategic acquisition of a company in the engineering services space today. We continue to focus on our margin program. We saw good impact during this financial year that we've seen in our results. As we look at the start of financial year 25, we see the discretionary spending and digital transformation work at the same level. We see the focus on cost efficiency and consolidation continuing. Our large deal wins in financial year 24 will help us in financial year 25. With that, our revenue growth guidance for the financial year 25 is growth of 1% to 3% in constant currency terms. Our operating margin guidance for the financial year 25 is 20% to 22%. With that, let's open it up for questions.
Thank you, Salil. Joining Salil is Mr. Jayesh Sanghrajka, Chief Financial Officer, Infosys. With that, we have the first question from Ritu Singh from CNBC TV18. Ritu.
Hi, Salil. Hi, Jayesh. First, just on your revenue guidance, on the lower end, you've actually lowered, the guidance compared to the previous year, now at 1% to 3%. Give us a sense of what you built into it when you say deal wins have been the highest ever in FY24, what you expect, what your conversation with clients has been, what the pipeline is looking like. And earlier you'd highlighted verticals like high tech, BFSI, etc., showing some weakness. Are you seeing some improvement there? Also for I think now the fifth quarter in a row, the headcount has been coming down. Any outlook you could give us there as well? And, under your project Maximus, you've been working on expansion of your margins, yet we're seeing in terms of guidance a similar range as the previous year. Tell us if there's, is this a conservative estimate, both in the revenue and guidance, please?
So I'll start with the revenue. Jayesh will comment on a couple of the other points. On the revenue, what we are seeing is the environment in terms of discretionary and digital work is similar to what we've ended in this year. We also had good traction in large deals, some of which will flow through in the next year, given the duration of those deals. Keeping that in mind, our growth guidance for next year is as a band higher than where we finished for this year. While the difference is small, it's still higher from where we finished this year. As we go into the industries, we see, for example, financial services to see a better outlook in the next year compared to the past year. We see, for example, manufacturing, which will have, while it'll still grow next year, will have a slightly lower or slower growth than this year. So there are some puts and takes in terms of different industries, and given the outlook with the discretionary spend and digital work remaining same and more focus on cost efficiency and consolidation, we've created that revenue growth guidance.
Yeah, so on the net headcount increases, if you look at it, when we started the year, we were at 77% utilization, including trainees. The growth environment also was different at that point in time. We had guided differently. So, we had to realign some of those factors as the growth environment changed. Our utilization has now gone up to 82%, including trainees, 83.5%, excluding trainees. That's one of the tracks under Maximus as well. Our attrition has also come down significantly, right? So that's the reason why you see a net headcount reduction. As we go forward, we always plan looking at what we are exiting in terms of utilization. We are still at 82-83% utilization, depending on whether you're looking at it, including excluding trainees. So that still gives us some headroom, because we've always said 85% is achievable utilization. So that's a headroom that we have. We look into guidance that we give, so that we bake in that. Attrition still remains very, very contained at 12.6%. So, we have that headrooms. And we also have changed in last few years our hiring model significantly. So we no more hire all the freshers for campus. We hire less than half of them from campus, and the rest we hire off campuses. So we have that agile model. So we will look at hiring as the year goes through. We don't have a number to give at this point in time.
The question, sorry, on what the deal pipeline is looking like. You said some of the deal wins from last year will flow into this year, but the new deal wins, what sort of visibility do you have?
So the deal pipeline again remains good. As you've seen in this past financial year, we did 90 deals at 17.7 billion. We have a good pipeline. The deals are more on cost and efficiency and consolidation. That is the theme in our large deals pipeline.
Thank you. The next question is from Chandra Shrikant from Money Control.
Hi, Salil. I just want to understand, why is there a divergence between your TCV numbers and the revenue growth numbers, not just for this year, but also for the next fiscal? Because, if you're talking about record deal wins, why is it not translating to revenue growth? Is there a runoff in existing discretionary programs, which is why the revenues are getting impacted? If you can give us some color on that. Also, the guidance, I think it's going to disappoint analysts, because a lot of brokerages were expecting between 2 to 6%. So, are you starting conservatively? Will you kind of, review this every quarter? Do you expect the second half to be better? Jayesh, just wanted to ask you on the pricing as well. At least the TCS management said that, one of the levers that they hope to use is pricing, because they see some opportunities there, because there hasn't been a price hike in a while. Is that something that you're hopeful of as well? And this is also the first time your headcount has declined on a full year basis in at least 20 years. So what can we expect with respect to fresher hiring in FY25? Thanks.
So let me start off on the guidance with the large deal wins. There, what we have seen is there's been a good traction with the cost and efficiency and the consolidation nature of large deals. Whereas we see that digital programs or some discretionary work is still not as visible within the work we're seeing. So when we combine those two trends or those two views, we get the guidance that we've come with, which is the guidance as we start the year of 1% to 3%. So from our perspective, we want to make sure that we reflect what we are seeing in the market today. Now, typically, at this time of the year, we have a good sense of the early part of the year, and the second part of the year, we have a set of estimates that we work off of. We will see how that develops, because the macro environment is still got a mixed outlook at this stage. We are very comfortable with where we see our large deals and the way we are winning those, because we think we are benefiting from the consolidation. But there is the other side where digital or discretionary is still a bit slower.
On the pricing, if you look at the Project Maximus, one of the pillars that Salil had explained in the earlier quarters is the value-based selling. And that track has done well. We are seeing encouraging results. One of the things that has helped move in this direction is the on-site inflation, right? After many years, you're seeing an increase in on-site inflation, and the clients are therefore more amenable to having a pricing discussion. You had a second question on that. Sorry.
Hiring.
Yeah. So as I said earlier, our hiring model has changed significantly in last few quarters or last few years. We are now on a more agile model of campus hiring. We do half or more than half the campus hiring at times from off campuses, right? Or fresher hiring off campuses, and we will embark on that. At this point in time, we are at 82% utilization. So we still have headroom on that. Plus attrition is very low. So we have not decided on the campus hiring numbers at this point in time.
Sorry, just one follow-up. What's your comfort level when it comes to utilization? Because
84, 85 is what we have said is our reasonable comforting level.
Thank you, Chandra. The next question is from Shilpa Fadnis from the Times of India.
Can help us understand how are you reading the US environment now that you have the robust job growth, we are seeing higher inflation, and how do you see this demand environment? Are we missing something in reading this? I have a few more questions, I think, if you can help us with the response.
On the US, I think as you've seen, we had a slower outlook in US both in Q4 and the full year. US, there are different things by different industries. So first, before that, at the higher level, with this sort of a economic situation, the expectation on what will happen with interest rates is also in flux. And so that, some of the capital intensive businesses will benefit from that. That has some constraints to it. Others, we have seen, for example, we commented in the last couple of quarters on telco and high tech, also on financial services, where there were places where there was concerns or slowness. Now, those sort of things are visible today, though on financial services, we do see something better in the coming financial year than what we had in the financial year that's gotten over.
Right. Infosys has been very selective in terms of giving hikes, so it's more meritocracy and top performers. So I just wanted to understand from you also the emphasis on tenure. Is it going to be a similar commentary this year as well? Is there going to be change?
So, our last comp hike was in November. We have not decided anything for this year at this point in time. We will decide as the year progresses. We have not made any decision on comp yet.
So Project Maximus, last time the impact was about $30 million. Now there's an update about how 6.5 million people were affected because of the cybersecurity incident. Is there an update on the number in terms of how much has been the outgo? And secondly, is there a management action in terms of from Infosys on the McCamish leadership side because of the cybersecurity incident?
So can you repeat the first part? I think I didn't catch the first part.
So last year, Infosys disclosed about $30 million in terms of the cybersecurity outgo because of the incident.
Yeah, so on the cyber event, we did have an impact of $30 million last quarter. We have a very small impact this quarter. It's in the range of $7-8 million. That's on the cost of all the expenses around the e-discovery, etc.
Thanks, Shilpa. We'll come back if there's more time. The next question is from Ayushman Barua from the Business Standard.
Hi, Salil. How are you? Yeah, so you mentioned that the trends in discretionary spending and digital transformation remains the same as such, right? So could you just throw some light on that as to, still, do you see some improvement in discretionary spending in some sectors in FY 25, and is digital transformation spending, do you still consider that to be a discretionary spending? That is first. Secondly, your competitors like Accenture, TCS, etc., have sort of quantified their Gen AI revenues. Is there any reason why Infosys is unable to quantify that? Thank you.
So on the first one, I think the discretionary work or the digital transformation work, as you mentioned, we said the outlook remains similar from where we are ending the year. So we don't see the change. Now, having said that, some of the color by industry, we see financial services overall, so it's not just digital or discretionary like that, is looking better in the coming year than in the year that's finished. Manufacturing is looking a little bit slower while it's still growing in this new year compared to in the previous year. We had a very strong growth in manufacturing. So there is some differences within industry, but the overall statement still remains on the digital and discretionary. On the Gen AI, we have an absolute leadership position in Gen AI. The type of work we are doing, for example, the 3 million lines of code we've generated through a large language model in Gen AI is absolutely industry leading. The projects we are doing, the work that we are doing with our partners. So if you look at some of the large tech partners, we are working closely with them to make sure that their platform works in different environments well, whether it's a hardware tech platform or large language model platform. So those are the elements that we feel extremely good about. We put all of our service lines into the change of generative AI, and we built playbooks on how that can work. If you look at the way we've looked at the use cases, for example, whether it's in software engineering, on process optimization, on customer support, on advisory services, on sales and marketing. These are detailed use cases which we are working with clients on, where we're creating already some quite good impact. So my sense is this is a place where we've internally taken a view with Topaz of AI first, and with our clients we have that same sort of a connect and commitment. So we feel good about where we are on generative AI.
Thank you. The next question is from Reuters News, Sai Ishwar.
Hi, gentlemen. I just wanted, is there any, do you expect any incremental from the McCamish event? You've said you've already shelled out around 36 to 38 million. So, and also we are also hearing, disclosures from the client side from Fidelity, Bank of America, and also has that, restricted your relationship with any of these clients? That is first question. And second question to Jayesh. So you had spoken about the pricing, right? As you said, the on-site is giving you more room to, have these pricing discussions. Is there any headroom you see, probably 2 to 5% is the headroom you're working at with the price hikes? Thank you.
I'll start with the second part of the first question. I think specifically on McCamish, we made or shared a disclosure some time back. And today in our statements, we've had a comprehensive statement which goes into the points that you're referring to. That's the statement that we should refer to with respect to McCamish. On the the second question was? The pricing, sorry.
On the pricing side, as I said, we have seen early and encouraging results on the pricing on the value-based pillar of the Maximus. We have not really quantified as to how much we expect in FY25 or beyond. Our endeavor of Project Maximus is in the medium term, we expect to, expand margins. So we are gunning for that, irrespective of whichever pillar it comes from.
Thank you. The next question is from Samir Bakshi from the Economic Times.
Hello, sir. This cybersecurity incident, this has come at a time when you are expecting more number of AI and Gen AI projects, right? So is it concerning you, or is our clients concerned because of this event? Second is, I want to know what is the tailwind you are getting in Europe, where we are seeing historical high of a decade.
So the second question is about Europe. The growth in Europe?
Yeah.
So I'll start with that. I'll come to the other one. So as you've seen again in Q4 as well, for the full year, we had a good growth in our Europe business. We continue to see Europe to be a good market for us as we go ahead. There is, of course, changes in the economic environment. So we will see how that will affect what the business will look like. But as a geography, we feel good about different countries in Europe at different levels. We have a very good traction, for example, in the Nordic countries. In the past, we've done an acquisition there. Subsequently, we've had also large client relationships building out there, and that is going quite well for us.
You had another question?
First one.
The
impact on Gen AI projects.
So there, on generative AI, it is something that is being built on cloud, on data, and of course on cybersecurity. But the work we are doing there with generative AI is really market leading, and we are taking all of the learnings into it, especially on the data layer, because data has become the critical enabler for making generative AI successful in an enterprise AI deployment. And so there, for example, making sure that the access to the data, making sure that the way it is put together and organized, making sure that it is used in the right way becomes more and more important.
Thank you. The next question is from Jas Bardia from the Mint.
Good evening, sir. So you had bought a German company which has about 180 million in revenue. Now you have outlined a growth of 1 to 3% for this year. Considering that you will get 1% of growth from this acquisition, are you actually outlining a negative organic growth for the financial year? That's the first question. Second one is, are you looking at bagging large vendor consolidation deals from two of your IT services peer, one of which is based in Europe, considering that they are witnessing leadership churn at this moment? And the last question I have is, in a meeting with Nomura analysts on, I think, Feb 12th or 13th, you had told them that the leadership bench is deep entrenched, that 50% of your 90 SVPs and above have been with the company for more than 2 decades. Now, what are some of the measures that Infosys is taking to retain this talent?
Okay, I'll just go one by one. On the first one, we are very excited with this acquisition. It's a fantastic company in engineering services space. It's a space where we are doing well. We think there's enough opportunity with the strategic platform to build out even more in the automotive area. This acquisition is not included in our guidance. So of course we'll wait because the acquisition is announced today, then it takes some time to close. As and when that happens, then it will be. So today's guidance does not include anything of the acquisition. I'll go to the last one, the one with the leadership. So leadership is, we are really quite fortunate with the leadership team that we have in Infosys. We have, over the last several years, had many people within the company move up to higher and larger roles, and they have demonstrated what they can do and how they can deliver. So we feel extremely positive with that bench, and that we have a huge bench of leaders even at different levels. Because one of the things that we have done, and this is going back several years, is focus on the leadership development within each different area of the company, whether it's on the sales side or the delivery side or the functions that work with those. And that is helping us. It's not like something that happened in the last 6 or 12 months suddenly. This is something where people have been there in the company for years and years, and that has helped us. And what it does is quite unique, because that's the real difference of what we do with this one Infosys approach. When you have a team, let's say the leadership team of the company who've known each other for 10, 15, 20 years in a professional capacity, they have a much better way of working together. And that is one of the reasons why we also win so many of these large deals, because we know these complex deals, how people can work across geographies. So it's a huge, huge advantage that Infosys has, which maybe very few companies may have.
Thank you. The next question is from Haripriya Suryaban from the Hindu Business Line.
Hi guys. Salil, just wanted to understand if you could give more details on this interest in the ER&D space, consecutive acquisitions that we have seen to develop this space. Generally, you guys go for building capabilities organically. So why this inorganic approach? And do you think with these acquisitions, you'll be able to go for different kinds of deals? Are you trying to build this expertise to, given this is the kind of a green spot right now in the market, is this the kind of approach? And given Europe is doing well, is this an active effort to reduce dependence on the American markets? And Jayesh, given the margin for, I think, the last complete financial year, you have the margin has been on the lower end of the guidance band that you have provided. Do you think in the next financial year there'd be possibility to reach the upper end? Thank you.
So on engineering services, you're absolutely right. We think it's a very good space and a strategic space. As it happens, we have a very large business in engineering services already. So in that sense, it's not like this will be the main thing that starts engineering services for Infosys. However, it is a strategic acquisition in a space we want to go further and deeper into. They have incredible client relationships and actual work that they're doing. We believe that combined with our depth in engineering services, their depth in automotive part of that engineering services, and then our broad client relationships across, whether it's in manufacturing, medical devices, telco, all applications where we can put engineering services, this will be a huge multiplier for us. So, and it's a large-ish acquisition for us relative to what we've done. So we feel very good and quite excited about the acquisition.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? when to buy, when to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither.
Hello and welcome to Profit Insights. My guest today is Akshay Mundra, who is the CEO of Vodafone Idea. Vodafone is coming out with one of the largest follow-on public offer of 18,000 crores. We have Akshay today joining us. Akshay, 18,000 crores, one of the largest FPOs that you're coming to the market. Give me a sense of what you're going to do with this 18,000 crores.
Sajid, thank you for inviting me to this chat. Your question, I think before I get there, let me just also say that, as you said, 18,000 crores, largest FPO. We have completed our anchor allocation and that has been announced to the stock exchange, and would just like to mention that in that we have names of many leading investors like GQG, Fidelity, Management Research. We have UBS, we have RWC amongst the foreign investors. From the Indian mutual funds, we have HDFC Mutual Fund, Motilal Oswal, Quant Mutual Fund, and we also have insurance companies like SBI General and ICICI Life. So a fairly well-covered, diversified book with leading investors. And one of the strong points is that the hedge fund allocation is less than 5%, which represents also the strength of the book. To your question, what is the use of these 18,000 crores? This has been explained in RHP, and I'll briefly cover that. The total amount of 12,750 crores will be used for CAPEX. About 2,175 crores is for the spectrum payments, and the balance is for general corporate purposes. And out of 12,750 of CAPEX, about 5,700 goes towards 5G, and about 7,000 goes towards 4G, which is both a mix of 4G coverage expansion and 4G capacity growth. Just to make it clear that this is not the entire funding or the entire capex that we are talking about. This is part of our overall funding plan, which also includes 2,075 crores, which is coming from the promoters, and additionally debt funding, for which we have been in discussions with the banks. And the idea is to have a fully funded plan for our capex needs for the foreseeable future.
I know you are raising nearly 20,000 crores in equity and 25,000 crores is expected to be raised in debt. In total, over the next 3 years, as the debt plans also fructify, as you yourself said that you are in discussion with the banks and financial institutions, what would be the total capex that you look to put in the next 3 to 4 years?
So while I'm not in a position to give you that guidance, what I can say is that the total equity plus debt is only being or is going to be used for growth capex. Our other requirements like payment of the existing debt, payment to vendors, and also payment of government dues post the moratorium will be met out of our internal cash generation. So the new funding, whether equity or debt, is primarily meant for growth capex.
Okay, I get that part of it, because you're in a FPO process, so you won't be able to give more than what is there in the RHP, and your full year numbers are also expected in the next couple of in a month or so. So I understand that part of it. But you mentioned that you got a good anchor book. GQG is there. There UBS, Fidelity, there's domestic institution. Many of them are long-term investors, and that means that they have to be assured what is the growth plan going forward. So what is the kind of assurance that you have given them? Because if they have to stay in for long, and there's long-term equity partners or strategic financial investor partners for you, what is the kind of assurances that you have given them?
I think we have explained to them our story, and like I am trying to explain to you. So let's say if I were to put it in a few points, one is that everybody is aware of the India story and what does it mean for various industries. So I think that I'll not talk about, but let's come to the Indian telecom. What are the positive things? First is that India has a growing population, a large population which is still growing, which is not the case with many other countries. And also the fact that every citizen of the country is either a customer or a prospective customer. So that is a strong point. Secondly, the penetration levels in India for 4G are still at 66%. And if you compare that with China at 116%, there's a long runway left for growth of penetration. The third is that the ARPUs in India today are amongst the lowest in any large economy or comparable economy. If you look at China today, we are less than 1/3 ARPU of China. So definitely there is room for ARPU improvement. ARPU improvement can happen in 3 ways. First is tariff correction, which is very obvious. Second is upgrade of subscribers from 2G to 4G or from lower usage plans to higher usage plans. And that opportunity is the largest for us because we have 42% of our subscribers who are 2G subscribers today. The third lever of ARPU improvement would also be that you are aware that today, telecom industry is becoming the best means to digitally distribute any content. And delivery of content on telco platforms by major content providers, including all the OTT players, is a trend which is growing day by day. And that is another thing which augurs well for the growth of the ARPU of the customers. So this is from an industry perspective. The last point on the industry is that we are now having an industry structure with 3 private players and a government operator, which is right structure for the industry to get returns while participating in the growth, which was not the case when we had 10 operators. So I think the industry structure is also good. As far as Vodafone Idea is concerned, I would say we have delivered a fairly good performance post the reforms package announcement in September 21. This has been done even when we have had very limited investments because of the liquidity constraints, and also where we have continued to lose subscribers. But despite these 2 constraints, we have increased our 4G subscribers for 10 successive quarters, every quarter on quarter. For ARPU also increased 10 successive quarters sequentially every quarter. And you will say that the revenue and EBITDA trends are also moving in the right direction, of course, gradually. What prevents us from participating in the industry growth and still lose subscribers is the lack of 4G coverage versus competition. And once we start using the funding for CAPEX, a large part of that and the highest priority of that is expanding our 4G coverage, which should enable us, or which we believe will enable us to arrest the loss of subscribers. Today, our subscriber acquisition of new subscriber share is already higher than our customer market share. And so the only reason why we lose subscribers is because of lack of 4G coverage. And as that gets issued through our funding and investment, then we are very hopeful that we will be able to participate. And I believe this is what kind of brings the investors to us. One of the other last important points is that the government is now a major stakeholder in the company, both as a shareholder and the largest credit provider. And given our situation and the balance sheet challenges we've had, which will get addressed over a period of time, it is government support will also play an important role. I was very happy to see the statements both by the Honorable Minister and the Finance Secretary yesterday, who have come out in support of saying that they need a healthy competitive industry and have expressed support for the FPO of the company.
Actually, 17 circles, that's your focus. I was just looking at your circles. 15 of them, you are the third largest player in them. Is the focus going to be to push yourself from third to second in those circles?
I would say changing the rankings is not our primary focus.
I'm talking about revenue market share will also increase, right, in that sense?
So let's say that may be an outcome. What I'm saying is the way we look at our strategy is that we have to make investments so that we can grow our revenues. So our investments are focused on execution of our strategy. Whether that will result in change in market share, I'm not commenting on that. Of course, if you will see in the past, whenever any player kind of expands their coverage in a significant manner, it does result in improvements because then you start participating in a larger geography, larger market. However, our focus will remain on executing our strategy, investing as we plan to, and getting the benefits from them. And the market share changes would be consequential. And we have always focused on good use of capital, and that would also be one of the driving forces for the decision making on where to make investments and how to make investments.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
For the past 2 years, people who have wanted to have unsecured loans one after another have had a gala time by borrowing money or small ticket loans via digital apps. But not anymore, because this has led to an inevitable over-leverage in the financial system. This over-leveraging has caused banks, NBFCs and Fintech platforms to relook at their business strategy as well as credit underwriting models. Therefore, this means if you need a personal loan now, it may not be as easy as it was. Let's understand the problem better. What exactly is over-leverage? How does it affect you and me? And how is it measured? An over-leveraged borrower is when an individual has so much debt that it becomes almost impossible or extremely difficult to repay that amount. Now, to measure this, every lender, the one who gives the money, has something called Fixed Obligation Income Ratio, or FOIR. This is a ratio which indicates the lender's risk-taking ability. For example, if a lender has a FOIR of 25% and a borrower has taken multiple loans from different entities, then in case the FOIR exceeds 25%, the loan application is likely to get rejected. For banks, the FOIR is low, and for fintech platforms, the FOIR goes as high as 50%, which is why borrowers rush towards digital lending apps for easy money, because high FOIR for fintech platforms indicates their willingness to issue back-to-back loans quicker than traditional banks. Besides this, lenders also look at several other variables such as income growth, repayment history, bank statements, device data, and behavioral patterns to underwrite a borrower. Underwriting a borrower is basically assessing the risk related to repayment of the borrowed money. To combat over-leveraging, let's first look at what banks are doing and then what fintech platforms are doing. Banks have fine-tuned their credit criteria in terms of how much money they should lend to a particular borrower. They are also recalibrating their co-lending arrangements with fintech platforms. On the other hand, fintech platforms are now migrating towards traditional underwriting models which banks already use. They are also changing their business model from a burn and churn model to a building the book model by offering longer tenure loans. Moreover, apart from personal loans, fintech platforms are now exploring other avenues for growth, such as lending to MSMEs and offering loans against property. While all of this is going to make it difficult for borrowers who are taking and have taken multiple small value loans, the first-time borrowers will take a massive hit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
So once this fundraising is done, when do we see qualitative and quantitative improvement in your revenue mix, in your ARPUs, in your subscriber additions?
So as I said, our revenues have been improving, 4G subscribers have been improving. The investment should make that improvement more meaningful rather than the gradual trajectory which we have seen without investments. In terms of where the investment will help us significantly is to help us arrest the loss of subscribers because of lack of 4G coverage. And of course also to roll out 5G, which is important. I will not be able to give you a timeline, but I would say that investing in 4G coverage is our topmost priority. And we expect that once that investment is completed in an expeditious manner, that would be the biggest factor which will enable us, or which should enable us to arrest the loss of subscribers.
Because, do you think that you have bottomed out as far as the loss of subscriber is concerned on a gross level? Because 4G you've been increasing, but on a gross level you've been losing subscribers. So have you bottomed out as far as that is concerned? From now on, you're going to see a gross subscriber addition going forward?
So I would say that we have to make the investments first and improve the coverage and experience. But we are very hopeful that once that investment is made, we should be able to arrest the loss of subscribers. I mean, I would say that if today we get a higher customer acquisition compared to our market share, why would we not be able to retain subscribers once we are able to provide a better coverage? And that would be our focus area.
I've been speaking with some of the investors, and they've been saying that they expect you to add at least, 15 million net subscribers on an annual basis from here on. That's the expectation they are putting it on you. Is that a achievable target for you going forward? Every year, 15 million net additions from now on?
As I said, we will be able to participate in the growth of the industry and get our reasonable share. As I said, as we start participating, and we are doing more than our CMS in terms of new customer acquisitions already. So we hope that we should be able to match up to customers, the investors' expectations.
Good. On the tariff front, that's everyone knows that tariffs are low. But no one is willing to push the button first because, who's going to take the plunge? But you will have to do that, right? That's the kind of assurance that you've given to the investors. They're saying that your ARPUs are going to go up, your revenues are going to go up. So give me a broad sense of how much the tariff can go up. Of course, you will take it on a phased manner. But what is the kind of, potential tariff that can go up from here on?
So let me describe it that firstly, what should be the extent of tariff increase? And I would say that tariffs at least need to get to a level where the industry can start returning its cost of capital, which is not the case today for any operator. And we've had a prolonged period of operating below cost of capital, which is not good for any industry, because otherwise where will the industry generate the cash to be able to make future investments? And we all know that telecom is an industry where investment will continuously be required. So definitely the cash generation needs to get to a level where cost of capital is covered. Now, the second point is that what should be the quantum of increase, or where is the ARPU? So while I cannot give you a figure, there is a fair amount of commentary from our peers. And I would say that including the 5G investment, roughly the figures which the industry players are talking about in terms of recovery cost of capital should be right. So definitely fair amount of correction is required from where we are today to reach to a level where cost of capital can be covered. I would say the urgency is there because the cost of capital was not covered even when we were only in a 4G scenario for quite some time. And 5G has been added to that, which has further kind of accentuated the situation. So I think there's a strong need for tariffs to get to levels where ARPUs are sustainable and provide ability to the industry to make further investments. I would expect it to be faster than a very slow pace. In terms of a quantum of increase at one time, we have seen tariff increases the last two times, and that quantum of tariff increase at a single time has been well absorbed in the market. So sometimes one may have a concern, is something too much at a time? And we've had two precedents, I think, over the last 4 years or so, where price increases have been well absorbed in the market, realizing the fact that the absolute ARPU levels in the country are amongst the lowest.
Can I put in a figure here? Because what I've been given to understand that you may need at between 20 to 25% of increase in tariffs post-elections up to FY26. Is that a right figure to go by to get the return on capital?
No, I think return on capital, you have to see that what is the current level of ARPUs, what is the ARPU required to get to a cost of capital. I believe that gap is much more than 20% today. So a 20% tariff correction will not take you there. How much would be the tariff correction? I cannot comment. But as I mentioned that in the past, tariff corrections of about 20% have been well absorbed in the market.
My final two questions that I want to ask you is, if by September 25, the moratorium ends for many of the telecom operators. and so every operator would be looking to increase the tariff so that they can generate internal cash flows to pay up the government spectrum fees which they owe. How do you see yourself? Will you be able to generate enough cash flows to take care of paying off government debt?
So, you see, the moratorium expires in September 25. As I mentioned in the beginning, that we are tying up the funding primarily for new capex, and the existing obligations will be met out of our internal accruals, which we expect will improve as the investments come along. In terms of immediately after the moratorium, whether we are able to pay the entire obligation from our improved cash generation or not, we'll have to see at that time. But what is important to note is that the government's reforms package announced in September 21 has provided that post the moratorium, this installment series, which is coming out of the 4-year installments which have been deferred, can be converted to equity by the government. And my understanding is that this was provided for in the reforms package because there was a realization that while the cash generation from the business will improve, whether it will be sufficient to take care of the government obligation immediately after the moratorium is over was not certain. And so government has provided this in the reforms package, a possibility of conversion of this deferred installment series, which will start from October 25 onwards. So that is one support which is available in case it cannot be made out of the full cash generation.
But that would be a backstop for every telecom operator, right?
I mean, yeah, that's available for any operator if they wanted to do, provided you have opted for deferment. So everybody has not opted for deferment. It is available for anyone who has opted for deferment.
Okay. I've been talking to many of the analysts, many of the investors that you've been talking to as well, and who've invested to you in your FPO. Now they see that if Vodafone is able to execute the plan that it has envisaged, moving to 4G, from 4G to 5G migration, and your subscriber additions that you're looking at on an every annual basis. They're looking at, they're hoping that the revenues would be from 40,000 crores now to 75,000 odd crores by FY26. Is that an achievable target for you?
Ranjit, I cannot comment on specific targets. You know that very well. And I think in the interest of time, we'll have to bring this to a conclusion now. Because
that was my last question. I wanted to check with you whether that's an aggressive target the street has put in for you.
We'll look at that. Thank you very much for the conversation.
Thank you very much for joining us today, Akshay.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
True independence starts where financial dependence ends. Women's Day might have passed, but the data compiled by a report named Women and Finance by Crystal and DBS calls for your attention. For the longest time, women have been underestimated and underrepresented in many spheres of life, whether that's at home or at work. But for a change, there is a change this time, and I'm going to show you some mood-lifting data. Did you know that 47% of women make financial decisions on their own, and their independence when it comes to making financial decisions depends on 3 things: income source, age, and stage of affluence. Income source. 55% self-employed women take financial decisions on their own versus 39% of salaried women. Does that mean salaried women are more hesitant because they don't control how much they get, or do they? Age. 65% of women above the age of 45 years manage their finances independently. That means older women are financially more independent. Affluence. 58% affluent women tend to have higher financial autonomy versus 38% of semi-affluent ones. Why so? This is due to higher financial literacy and access to resources. Where do they save or invest their money? The report revealed that most women stick with traditional instruments for investment purposes such as fixed deposits and mutual funds, and self-employed women invest more in mutual funds at 17% than salaried women at 13%. How many women are investing in mutual funds? While the share of women in mutual funds has risen in the past 5 years, what is heartening to know that more women from the hinterland of India are investing in mutual funds versus urban centers. And the report also showed that the party state of India, Goa, has the most number of women who invest in mutual funds. Goa has the highest share at 40%, followed by states from the northeast, all in the high 30s. Chandigarh, Maharashtra and New Delhi also have over 30% share of women in the industry's asset under management. Now, I told you that older women are financially more independent, but women investors, at least 50%, are younger and between the age 20